Hello there. First. Yeah, Phil got here first. Yeah, boy, right? Excuse me, I still got a little. Alright, so I'm gonna have to do this until DZ gets on. So I've got to figure out how this is gonna work, because basically what's gonna end up happening is DZ is gonna be joining me. He's running a little bit behind, so for right now, I do have the red bandana on. I've been looking at stuff just for the last couple minutes. He actually sent me over a really detailed piece that he was writing up on the options chains. And then I've been going through and kind of taking a look at, uh, you know, a whole bunch of stuff that's going to be going on this week, and we're going to kind of combine some stuff and kind of talk about what we think is going to be coming on. The only thing that's going to be unusual is normally when I do this, there's like a little bit of delay. So I'm not sure how this is going to work with like me hearing like a 3 second echo on what day are they screwed. Um, they can choose to kick the can if they want to just eat the FTDs. But for the most part, it looks like probably Tuesday or Wednesday they're going to have some severe buying pressure that's going to come on. And at that point, it's going to possibly cause them to, lose. It just really depends on what's going to go on to the options chains Monday morning. If they get just stacked with in the money calls or bullish puts, they're going to move up, and then they're going to, I can tell you this, they're going to fight. Because at this point right now, I don't see them giving up because, but there's a lot of interest now. Like, the interest is higher now than it's been in months, and you're buying on Monday. Yeah, I mean, so if you're buying common shares, I just want everyone to kind of know this, that if you are buying common shares, those really won't hit until T plus 3. So basically, the day you buy them plus, another 3. So, are you adding to your position anytime soon? I've been adding to my position every single week. I've been selling bullish puts. So I actually sold 4.50 and $5 puts last week, along with I actually sold some sixes. So those actually didn't make money. But hopefully this week they will be. So I collected the premium, and I have shares now. All those went through. Yeah, I'm just a little bit worried about how I'm going to deal with this echo with DZ, because I've got to figure out, because, obviously. Well, maybe it's just if I take off the YouTube thing. Let me see if this works. It's just all depend on when he comes in. But if I turn on my headset, do I hear an echo? Let me find out. Alright, so my headset's on. Okay, I'm not hearing an echo. So as long as I don't play YouTube in keep the screen up in the background, I should be okay, I think. I think I'm still talking technically into this Discord chat, so I think we should be okay. I should be able to, I think, click my screen here if I need to, and I guess I'll have to do this. If I had to do that, and then I could do, like this. So you guys can still see that right now, right? Okay. Someone says, reading through here. I'm buying options, not sure which ones I want to go with or how long I want to buy out. So obviously, in the money options are safer than most of the other ones, just because, you're likely to still be in the money even if they attack the stock down. Personally, I like to kind of think about where I think the stock might fall to at times. So for like recently, if you've noticed, we've kind of been going up on this, we've been bouncing off certain levels. And actually, I think we've been bouncing off the 60 on, let me see if I can pull up that real quick. I think I have it on Weevil. The 60's already up, so let me just see if that works. Can you guys still see that screen? Excuse me. So if we were to break it down and actually pull up, I think it was on the 1 hour, and zoom out. So if you look right here, this is your 60 right here in the green, right? The 60 moving day. Look at this perfect, this is how I know this is smart money, because this is not how retail typically trades. So they got in here right on the 60 and they pushed it up. Shorts pushed it down, right? And then perfectly bounced right there on the 60 again, and then touched it one more time and then pushed up into the fives. Then it kind of came back, same thing. You go up, they short it down, boom, bounce off the 60. I mean, it went under for a second, and then bulls came back in and pushed it up. Then we've come back up here. You're going to go through, and then I expect them to try to push it down and then probably bounce, or maybe even break through the 60. And then I expect bulls to try to, just continue to buy, or it's just going to go straight up, Monday morning, and we're going to see this big thing up, and then we could have a retest somewhere, and they could really go for it on Tuesday or Wednesday, just try to scare the crap out of retail in the morning, just like a never-ending waterfall, probably bounce right up. But someone's buying up right along these, points. Like if you look here, started there, bought again. So that's what's going on basically in my eyes. Like, so if you were trying to time it out, I would be buying off of those, I'd be looking for those kind of entries right there along spots where we've bounced. And there's, typically, because, we've got a ton of gaps to fill on the upside. Like, we've got ones in, like, the 7s and 8s. And, there's just, I think Ace had a list of all the gaps. But, yeah, if you were going to buy in the money ones, like, if we're sitting here at 5s, I'd be buying 4s. Like, I'd be buying, like, $4 call in the money calls for myself, at least. Or I'd be selling $4 or $5 puts again. Because, those are, to me, are safe. If you sell a put, sorry, let me turn off my phone so I don't distract anyone in the future. But, personally, that's what I would do. Make sure DZ's gonna be coming. Okay. Plug in my headset so it doesn't die. Yeah, and if you were gonna be like a week or two out for options, that's personally what I'd be doing. In Discord earlier, heard some chatter about Catalyst, or do we need one like GameStop? Ryan Cohen joined the board. Great earnings. No, so we don't need any sort of catalyst at this point. Like, the catalyst is the fact that, like, these guys are in a bad spot. Like, the truth of it is, like, let me see if I can pull up DC stuff, because he had written this thing, and a good amount of the float is locked up. Like, just in the options chains, not including, like, we've been at utilization for 100% since March 8th, which was back here. Where was it? Here's March 8th. So we've been, we have to go to a daily. So, since this day right here, that's when we hit 100% utilization on the earnings call. Look at that. 100% utilization there. They drove the price down to 210, and then since then, they haven't had a utilization that's been lower than 100% since this spot. But yet they're still managing to find shares. So, it is what it is. But yeah, there needs to be no further catalyst. Like, we already have a large portion of the shares just locked up in the options chain in the money, which is dangerous for them. So let me do this. Let me open up one of these documents that he sent me. Hold on. Where are we at? I think someone's... Oh. Something's going on. Let's see. Okay. I'm just going to tell him I'm on. You there? Yeah, can you hear me? Can you hear me? Let me jump into the... Can you hear me now? All right, so I think we're both in this room. All right, let me see. You've popped out your browser on another window. I don't know which window I popped it out on. Let me see real quick. Oh, here we go. Can you see this? All right, so... Is that any better? Okay. Yeah, I've been dealing with that the same way. Yeah. Yeah, I was gonna say it's been. Yeah, we've never actually talked in person, so we've always just been going through the. But let me see if I can get this loaded up right, and then I'll let you share your screen if you want. Give me 2 seconds. We're sorry about this. We're kind of new to this. This is our first time ever trying to work this out. Let's see. All right, so I think at this point, do you have a share your screen button? Oh, wait, hold on a second. They said they can't hear DZ. Okay, hold on. All right. So I guess watch stream. Does that work? Okay. So I have to figure out how to make, I guess, YouTube hear you. It just sounds like he's in the background. Let's see real quick. Still can't hear him. Okay, let me see if I can... What happens if I do this? Can you guys hear that?
I hear you pretty clearly. The question is, can they hear me?
Okay, so they're saying they only hear one side at this point.
Hmm.
But let's see. I just hit the button that said desktop audio. I'm wondering if that will allow you to be heard now by them. Oh,
Okay.
they said they can
Let's
hear you
see.
now. We can hear now. Okay.
Sweet. Sounds good.
Okay,
Yeah, and I don't hear
so
myself either, so no echo. Perfect. Alrighty. Well, um, okay, so I guess the way I've used this before, so I've almost always used Discord for streaming Jackbox or other video games to friends that live in other states. So, yeah, I think this should, hopefully everybody can see my screen, which is probably just my desktop or Discord setup here, and switch over to my Firefox browser here. So
apparently I'm real quiet and you're real loud.
oh boy.
That's fine.
Yeah. Oh. You can always turn up the volume, I suppose.
Yeah, you can. They can turn it down, and I guess we'll figure it out. I'll try to
Yeah,
talk
figure it
direct.
out along the way.
I'll try to talk directly into the mic though.
Okay. Yeah, you're definitely louder on my end as well.
Okay.
Yeah, I don't have a fancy mic.
It's fine.
I've had this MacBook for probably about 10 years at this point, so the audio still works quite good here.
Okay. Yeah, they said he doesn't seem that loud to me. I guess it just depends on who's listening. They're saying it's fine. Let's just go.
All right. Yeah, sounds good. All right, so we seeing my screen all right then otherwise?
Yep, I can see you.
Yep, sounds good. All right, well, yeah, if you want to try to take this to YouTube, I guess we're set up on this end of things.
Yeah. So we're good to go. We're actually recording right, not live. I'll just edit out that part, but yeah.
Okay. Oh, yeah, no worries. So, all right, well, I guess it's good to be actually talking to everybody, not just, typing away text and sending millions of screenshots of my, trading apps. So, good to actually have a conversation here and, have a, good discussion here ahead of what will probably be fireworks this week in some capacity. And not just with ATER, but everywhere, I think.
All these short stocks.
Yeah. Yeah, so, yes, I've always wanted to ask you, on how did you arrive on ATER? I mean, there's tons of meme stocks out here. I know, like myself, I got into it first with, I think it was AMC's back or Dogecoin back in January of 2021, and then by June, like when AMC was picking up again, I picked up a few when they were like $10, and then watched it go, and then since then I've kind of been hooked on this whole thing. So.
Yeah,
That's how I gatewayed in.
Yeah, it's pretty fascinating. So I'd been a fundamental trader for a long time. I mainly, never messed with, anything that was, more risky. But I did catch a wind when I was on Wall Street. I used to go to Wall Street bets mainly just to kind of laugh because, if you understand trading humor, they had some pretty funny stuff. And so what ended up happening was I saw this guy saying that he was going to buy GameStop. And I was like from a fundamental aspect, I was like, what is this guy doing? Like, that's like a dying business. That's not what you do. And then the stock kept going up though. And I was like, what's going on? And he was buying it in like the fives and I was like, then it went up to like 10 and I'm like, okay, what's going on? So I finally got around when it was like 12 or like 15, I read the DD and I'm like, holy crap, this guy's right. Institutional ownership was 120%, and at that time he's like there's no possible way that these guys I'm like, oh my god, you're right. And I started researching into it and I started crunching some numbers and I'm like, holy crap, there's no possible way this is not going to go up. And so that's my intro was into GameStop, and I bought some AMC at the time, and I also bought some BY and a couple other Cost and a couple of the other ones, but then I started kind of looking around and just seeing how many other small caps and other ones that this is happening to, because obviously GameStop and AMC were kind of medium size at the time, and they obviously grew into a large, or they were smaller but grew into a medium cap, and then I started thinking about how many other companies is this happening to. So I started going around, and at the time, GameStop and AMC were both kind of chopping around, and I said, okay, let me take a look, and I found Aterian, and so for me, Aterian looked interesting because it had a really small float at the time. This is before
Hmm.
the first round of dilution with High Trail, and I started diving into the numbers, and I'm like, something's going on here. And then obviously they ran, and I was part of that. And then I started actually writing some DD in the beginning of it, and then I saw something that I didn't understand, which was actually, you know what? Let me do this. Am I able to share my screen real quick?
Yeah, I'll give you ownership back here. So let's um, yeah, I'll stop my stream. There you go.
Okay, so I'm going to share my screen real quick. I guess this is fine. I'll just go live. Hopefully everyone can still hear me. And I need to pull up this. All right. Can you guys see that?
Maybe.
Are you not seeing that?
Um, yeah, I just see the oh, there's your watch stream button. Okay, I clicked it. Yep.
Okay. So something kind of interesting that I noticed was this, and I track a couple different indicators, but I started noticing it with Aterian, a couple things that I thought were really interesting, which was this first part right here. Do you know anything about the ADL and the like money flow and on balance?
Accumulation distribution.
Yeah,
Yeah, that's
exactly.
it gives you a measure of volume as a function of the total price, for that particular time period.
Correct. Yeah. And so what I thought was interesting was if you go, for example, to like an Amazon, right?
Hmm.
You have the money flow and then on balance pretty much mirror each other, right?
Yep.
So
Money
that's
flowing into the stock.
yeah, exactly. So money flow is green, and I make white on balance, and then I look at the accumulation. When it goes up, you usually see a spike up. Then when it goes down, you usually see some downward pressure. But you see how, like for example, money's flowing out of the stock. You hit the high here, if you just follow it right down, right?
Hmm.
Okay. Now let's go to Aterian real quick. Something weird happens here. So you have, for example, now all of a sudden, and this is what I think happened the first time, which was somebody was pushing the price up, and maybe it was, I don't know if it wasn't all retail, because retail really came in these last waves here. So
Hmm.
I'm on, I think, the 4 hour, but if I go to, for example, the daily on this, this is where I thought it was interesting. So you see this first run up. You see the price, the ADL is going up because the price is going up. You see the on balance going up. You see the money flowing into it, right? Well, then the
Yep.
ADL just drops off a cliff. Like they're trying to push the stock down as desperately as possible, right? ADL
Yeah.
goes all the way down here. But look at the money flow and look at the on balance. They both go up because retail's now FOMOing in. They're like, this
Hmm.
play's not done. This play's not done. They're coming back in. This is what's happening. But look at the ADL down here. Even though the
Hmm.
price is going up, it doesn't show it down here. So what ended up piquing my interest was it looks like the money flowed in, but it never left.
Yeah.
Right? Let's go back to
Yeah.
Amazon. Go back to Amazon. Right?
Hmm.
The money flows in, and the money flows out when you go down. Like, look at that. Like, you have money coming in. It's up here, really high. And then when you start going down, you should see the money flowing out of it. That's how most stocks work. With Aterian, though, you've got this money flowing in, and it never effing flows out. It just stays up there. And that's why I thought
Hmm.
retail had locked up the float the first time, because the money flowed in, and then you'll see some sag on it. You'll see people selling off in small amounts, but like the money flow didn't flow that much out. Like it kind of drooped a little bit, but then recently it's gone back up.
Yeah.
So that's what caught my
So.
attention, because I'm going, some of these indicators aren't matching, and then I started noticing some of the volume. The volumes for the day were not matching, and so I was like, something's going on here.
Hmm.
So this is just me catching some of that, and then some of the volumes were not matching up to what I was looking at on FINRA. So I called FINRA and I was like, "Hey, listen, I'm seeing some discrepancies here, and I can't quite figure out what's going on. And they were like, huh, that's weird. That's literally their response to me was, huh, that's weird. And I was like,
Interesting.
something's going on with the stock. And that's when I was like, every single time, like, look at this. Like, we had a spike up on earnings because we actually beat on this earnings. What does it do? They spike it up. Money's not flowing. Like, there's some weird things that are not happening on the stock that should be happening according to these indicators. And that's what piqued my interest about Aterian, because once we get down here, like, listen, when it was, for example, we go back to the daily. When it was up here at 48 or whatever it was I'll have to get the weekly, but when it was up here at 48, there wasn't a ton of short interest. It wasn't until this point right here when we went through that second spike, when the second spike right here, that's when shorts really went in on the stock hard. Like, they were in here, like right around here is when they started getting into the stock, but they like doubled down right here. And then I don't think they were expecting earnings to be like that. So they ended up like actually like really hitting it down on earnings. And that's when I was like, something's going on with this that's not on the up and up. Like, you can see like there's a big spike in that, and then, but once again, the money never flowed out, and now the money looks like it's even flowing even more in. Like, the on balance is going up, the money flow is going up, and they're pushing it back down now. So
Yeah.
that, like I said, for me, that's what piqued my interest, and that's why Aterian got real interesting for me, was because I saw this right here happen, and I said something's not right. Like, I know for a fact that there's something not going. That's just my opinion, but I knew there was something more going on when I started comparing volumes, and I started also looking at that. So that's kind of how I got my like thing going with the Aterian and started writing DD, because I'm like, these numbers don't match. Like, FINRA's not sure what's going on. Like, the indicators don't look right. So I'm going to give you ownership again. So.
Yeah. Well, thanks for sharing all that. Certainly appreciate it. I will. I'll take my screen back here. I'll go to my desktop. All right, I should be live now, and hopefully everybody can see my Firefox browser with unusual whales pulled up here.
Hold on. We're still looking at your stream is ending. Cricket noise. Maybe.
Yeah. How about now?
I see your Discord right now.
Okay. I'll stop for just a second. Let's say that was good. Now let's try. Okay. Yeah. Let me just click my entire screen. How about now?
Yep, got it now.
Perfect. Okay. Sorry about that.
All good.
Yeah. So I guess as someone who's, I paid very close attention to what's happened with. I mean, I wasn't in on the original GameStop. I just played Dogecoin because, like, I had no idea what the markets were, back in January of 2022, and I'm like, well, it seemed plausible to me that, like, everybody within retail, and especially at that time with the stimulus checks, I guess, going out, and everybody has $1,200, and everybody's like, well, this seems like a good investment here, even though, hindsight's obviously 2020, and it turned out to be a pumping up like everything else. But like, I bought, I don't know, it was like 500, even though coins, hindsight's obviously 2020, and it turned out to be a few months later, it's up to 20 cents, and then I think at one point in the springtime it went to like 70 or 80 cents. I'm like, holy crap, this is going to $1, and then I think what really got me interested though was like there were so many people, everyone with AMC is like, $100,000 the floor, $500,000. I'm like, some people, tried to make the argument that, like, yeah, this is possible because, like, you lock up the float, they're going to get margin called, and there's supposedly this insurance, that's backed by the United States Treasury that locks up, I think, up to $43 trillion, that says, well, if this is the lowest price they're going to sell for, then this is what, they have to give it to, or they have to do it and, use this insurance supposedly. But, I mean, at that point, like, I was like, I didn't really believe it because in order to actually do that, that would effectively collapse the entire global economy because, that's over, what our GDP every year is, what, a couple, $30, $40 trillion dollars,
Yeah,
So
wasn't
that's
realistic.
basically, or sorry?
Some of the numbers that people were throwing out were not realistic. I was like,
Exactly, yeah. But it was still interesting though, because I'm like, okay, well, even if I get like $100, that seems reasonable. And then, I watched it go from 70 to 50, and then 60. It hung in the 60s, I think, for a while. AMC, just gradually like whittled down. It had one last attempt, I think, in November, and then that's just when not just AMC, but GameStop, Aterian, Wish, a number of retail favorites. They started going from whatever they were trading between June and November, and just kind of going through this nonstop pitfall. Like very, very few stocks I saw were going down, and I'm like, okay, well, if retail is still buying all these stocks, and this is kind of how I got into Aterian as well. Like I noticed it, I think, when it was like $12 or $13, and then I watched it go to 20, and I still wasn't like totally comfortable, I guess, with investing at that time. But I'm like, okay, this seems interesting here because clearly, there's more short interest here. It went from $3 to $19, and the float, even with the whole dilution issue with high trail, was still pretty small. So that's when I really, really started to look into, what's driving these two things. And then the two things I kind of arrived on were algorithms and the options chain. So I'm a little bit of a unique case, I guess, in the sense that I kind of got into the markets backwards, where like I started really seriously trading only in options and not necessarily stocks, because I don't know, with my background, like I understand the mathematics behind like what goes on like in the options, like how they're priced, how they derive their underlying value, and frankly, knowing that you can make a lot more money with
options,
a significantly less upfront capital investment. Like it was appealing to me, as someone who has only been out of school for about 2 years or so, and working on an efficient way to kind of pay my student loans off in the background. So I'm like, okay, this seems like this could work out pretty well. But then what I realized was over time, like, if more and more people are buying the float, like Adam Aron, for example, he's coming out with AMC and he's saying, the retail owns 75% of the float. And then this last earnings report, he says retail owns 90% of it. Okay, well, 90% of about, 500 million shares is, over 400 million or so. And then, if a certain number are held up by institutions and held in the ETFs, then where are they getting the rest of these shares from?
Yep.
So
450.
You can do a little bit of. Sorry, were you going to say something?
450 million, right? That's about 90%.
Yeah, 450. So that's a significant amount of. I mean, someone can correct me, obviously, but it's definitely in that ballpark. And I guess the point I'm trying to make is, even like, let's say institutions hold, we'll say 50 million of those shares, and then if you lend out 50 million shares to short, that increases the float from 500 to 550. So that's effectively what gets circulated around on a day-to-day basis. But if retail still buys those remaining, those short, those shares that are short sold, then, then where do you get the rest of these shares in order to drive the price action? And that's where, you start seeing, days where AMC would only trade a couple million shares a day. You would see these ginormous option orders, $500,000, $750 million, $2 million, they're going with deep out the money puts, or they're going with something that's just above the money or just below the money. Because with the way that delta and gamma works on these option chains, like, you're basically, you're putting a pin in there and then you're unleashing all that gamma, and then suddenly you're forcing market makers to use these short exempts, because they clearly don't have the shares, but they have to hedge their position in order to make sure that they're always making money off the contract. So like they don't really care necessarily, unless of course they're the ones behind it. Of course, that's where, my rolling thesis with Aterian's been a little bit divergent with, say, like a BBIG or an AMC, because, without all the floor transactions that I see in the Aterian chain here, it tells me that the market makers that are behind Aterian, they want to make their money off of the contracts, and they want nothing to do with the shares. So if they have to issue short exempts, for in this case, they,
like that day was 1.2.
Yeah. So, but they're being forced to effectively by whatever hedge fund I think is behind, whoever sold all these calls short recently. So I know I kind of rambled a little bit there, but that's kind of
fine. We're just talking
how I feel it's evolved or so. So yeah, it's this intricate dynamic between the retail investor, the market maker, and then, the smaller institutions, aka the hedge funds that aren't necessarily like a BlackRock or a Citadel. Like, why would they be involved with, a stock that has a 29 million float? So I don't know. So there's a lot of directions we can take this here, but
Yeah.
all in all, just like kind of understanding that difference with how it's worked with AMC and GME versus what's going on with Aterian. Like, every day, obviously, I have to be pretty diligent. Like, this is how I do my due diligence. Just check everything daily, make sure that nothing extreme is happening in the options chain. And just kind of watching the price action when I get a chance to, when I'm not, when I have slower days, I guess, with my day job, doing, being a research scientist here in the University of Oklahoma here. So,
Yeah.
I've been fortunate to have some time recently to just kind of watch it and study it and evolve the thesis as the price action evolves.
Yeah, so I know you had written me, and I started going over that today. And do you want to share some of the stuff that you have been finding when you kind of put all that together?
Yeah. So, I have several Microsoft documents here. So that's pretty much what I do. I just write pretty much every single day here. So not too terribly hard for me to take a bunch of screenshots and then just dump thoughts here. But so I guess, we can move the conversation on to, this is kind of the DD I think that'll get posted to the Reddit short squeeze and the ATER stock subs probably at some point tonight or so.
Yeah.
Yeah, so, you have a copy of this, so you can weave this in as you see fit here. But in terms of what happened Friday, on Friday, it was we did see a ton of volume, and, that was obviously a good sign. We didn't see as much as we did on Thursday, but it was still, enough to drive one more spike in price action. I think we got to like about $6.40. And that was mostly, I think, organic, just new retail saying like, we finally, we broke the 200-day SMA, we broke a couple of key levels of resistance, and it's clearly showing sustained, strength, I guess, in the upper fives and the lower sixes. So, of course, that's going to drive price action. But towards the end of the day, I noticed here, so I guess, I'll go to my unusual whales here. So we have three transactions, like three whale transactions that were over $40,000, I think. So like one right at open, someone flipping their calls right at, at about, 45 minutes after open. And then, about 2 hours before close, someone loaded up a bunch of $5 weekly calls when the price was still $6. And then starting at about an hour and a half to close, just a ton of these transactions just came through where they're clearly delta neutral. So, more or less they're closing out, they're buying calls to close, taking their profits supposedly from the April 14th chain and then, punting them to the April 22 chain. So there were just, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So they were close to, I think, 15 to 20 of these. And these are just the $40,000 and up premium. So this obviously implies that there were several, in the 35, 30, 20, 10 range or so that were, kind of excluded here. But just for the sake of not having my entire screen filled up here, it gives you an idea that there was a lot of auction activity at the end of the day. And it's no coincidence, and I think this is very clear here in the option data, starting, about an hour and 45, the price is still around $6, then it's suddenly 573, 572, 563, 548. Get a little bit of a breather here, it goes back up to 562, and then suddenly it's, going down 542, 525. And that a lot of that had to do, I think, with, these option rules here. So one of these transactions here I looked at here, where, they bought to close, these $4 calls here that expired today, and then they sold, into 422 going into the next week. So you buy, you take your profit, everybody goes home and they're happy. But because suddenly now you're putting the sell pressure on next week's chain, right at $4 or so, that's a high delta transaction. And, for the market maker to hedge this position, they have to short it. So there's a lot of shorting pressure, that's kind of put on next week's chain, at least temporarily, because they buy, the price goes up to back to 562. And then by the time they find people to buy the short sells, it's going back down from 552, 545, and then all the way back down to 525. So, and I think by the time all that hedging happened, we get to the end of the day and there's a pretty solid, 25, 30 cent rebound at the end of the day. 25 to 30 cent move, a couple of weeks ago would have been like, oh my God, what's happening? And today it's like, it's pretty normal. But
Yeah.
it just goes to show you how much the options chain really drives price action here with Aterian. And especially since as every week in the squeeze goes by, we had 8% of the float was locked up and exercise calls, from 2 weeks ago. Last week it was closer to 13%, and then this week, if Aterian gets back to $8, that's going to be another 8% of the float.
Yep.
When you combine that with the fact that there's 42% interest or short interest in the float, that means only about 1/4 of Aterian's float can be traded between me and you and any new momentum buyers that look here and want to trade the stock or own it or play the squeeze play. And every week that this happens, you're going to see a ton of new option buying. People are going to start loading up, $4, $5 in the money calls will start being $6. Those are going to have to continue getting hedged. They're going to continue. The market maker has to hold on to them. They're going to keep collecting the premiums. They're going to hold they're going to short a little bit. They're going to, buy a little bit, but the rest of it it's just going to be traded. And as long as these shares keep getting assigned to people that are willing to hold the options contracts through expiration, then that continues to whittle away the amount of float that gets tradable every week. So not only is the price going up, but there's fewer and fewer shares that can go back and forth each week. So to kind of conclude this thought here, we saw this last week with SST. We saw the same exact thing this week. And there's a very good chance, I think, that we're going to see it again on Friday. Like if we have a good day, Tuesday, Wednesday, people are going to take their profits. They're going to roll their contracts, and you're going to see this, some pretty sharp moves downwards just from, this option rolling mechanism that tends to happen here. So,
Yeah.
So that's both a prediction and as to how to see that. But
what do you see for, like, obviously I was taking a look at, we had been bouncing off the 60 moving average. That's something I've noticed off the, I think the hourly. I don't know if you have your thing up, but
I'll pull my Weeble up here. Sure.
I was going to say, what I've noticed is it's been bouncing off the 60 for the last, basically since the start of the run. You can see actually they bought in a couple times right on the 60. And if you pull it up, like, is green your 60?
So
your 20.
pink this is I use simple moving averages here, and this is so 50 would be all the way down here at 448 or so.
Yeah, maybe it's a different one that I'm using.
So you said, are you using an exponential moving average or a...
It might be. Hold on, let me see what it's listed as. I don't think you guys can't see my screen, right? Just pull it off. I have it up on. So I don't use Weeble typically to trade. It's just something I've been noticing.
Yeah, I mean, I also have trading view here that I can.
Yeah, but whatever it was, what I was basically watching, it kept bouncing here. Let me get the 1 hour, and I have it set as. Make sure I've got the color right. Yeah, they just listed as a 60 moving average, and maybe if I had to show you my screen, but basically what it looks like is every single time I've touched it, it's just going up.
Actually, I can give you my screen here. Go ahead.
Hold on. I'll zoom out real quick.
Yeah.
All right, so let me grab close stream, and then let me see if you can see this. Oh, wait, no, I don't want that. Hold on. Move this over here. All right, tell me if you can see this. Oh. Did I do something wrong? Hold on.
Okay, yep, I see your ATER trading view.
Can you see this?
Yep, I see your order book, trading view, depth chart.
All right, but you see this right here?
Yes.
Okay.
Yep.
So I was just looking at this one, this green line. So it's listing as a 60. But when we started it, It was right there, sitting on it. We came up, and we came down right here and touched it again.
Mm-hmm.
And that's also on the Bollinger. Then we moved up nicely. We reset it back, and look right here. It actually moved down across it and then popped back over it. And if you look here now, this green line right here, I kind of anticipate us seeing it come down into this range right here, and then that's probably around like 4 something, like 490 or 5. And could it touch that and then pop back over? It just seems like they've been basically using this as like every time it falls below that, they just buy it up, trying to move the price up as cheaply as possible. Because I think there's smart money on. I think smart money is at least buying these dips on it, because I think they're looking to basically pop it over and do it as cheaply as possible. All right, I just gave you back the screen.
Yeah.
You tell me what you think about that.
Yeah, I use slightly different indicators, but to be quite honest, they come to a very similar conclusion. The person I learned from, and then just kind of doing my own, due diligence, trying to figure out, like what set of indicators tends to work pretty well for me. These simple moving averages, I think, tend to work pretty well because, so
it's very similar. It's basically bouncing off the same things I was showing you.
Yeah, so it can. Yes, in this case here, this is a 20 moving hour. So I think a lot of people use that as kind of if they're swing trading it during the middle of the day, they'll use that as the confirmation entry. So like on April 7th, for example, if they missed out buying at 250 and they wanted to re-enter thinking that it was going to do well, they could have bought in at about 352 or so, and then later in the day it's already 390, and then it gaps up to 460 over the next few hours. And then at some point, it just kind of retraces back to the 411, 410, breaks below it, but still holds pretty good strength here, kind of hugging that this 50% Fibonacci level. This is another thing I like to use too, are these Fibonacci extensions. Yeah, so I guess just for enrichment purposes here too, because I talk about this a lot in the Discord stream here. So I typically make it based on wherever the low point is immediately following a spike. You find the highest point here, and then wherever it bottoms out before it begins its next momentum up, you can use the extension here to kind of predict what percentage. Yeah, so that'll give me a pretty good idea of where the next levels are. So like 100%, for example, would be about $5 here, and then I think on October, April 6th here, it looks like it retraced fully here. So that was probably that's about a 30. Let's see here. Yeah, that's about closer to a 50% retrace. Ideally, for these types of either gamma or short squeezes, you don't want it to retrace more than 50% of its move, like before anticipating the next leg. So, if it goes down 50% and then it starts, channeling back up, like you can see it, you can have more confidence, that there's going to be another leg up here. And where this 20-hour SMA line, I guess it kind of, it held the 50% here pretty well, and then, it still, maintained, I guess, at 30% or so, or 38%, and then that's about as low as it went until it finally reached 100%, I think, on April 13th, so basically a day before the, before the OPEX, and then twice, it challenged that 161%, and then, challenged it again, towards the end of the day until, we closed where we did. So, I'd like to use these just kind of as a combination. I think there's so many ways that you can do this. Frankly, it gets overwhelming. So you kind of use the ones that work best for you. But I think we ultimately agree, though, that it's probably,
we should see like a retracement.
Oh yeah, 100%. Yeah, so like with these fib levels here, you notice that they tend to get a lot wider, like as you go up. So that obviously implies there's going to be a lot more volatility as we go up. And if we did hit 161% on this particular pattern here, I saw this with BBIG back in January. I've seen this with a couple others, that I've played intermittently here. Usually when it hits 161% for the first time, it does like to test that 100%, for the first time. And then if it cleanly curls up off of that and then retest this 161%, that's where, these money makers, the really big squeezes, where the 261 and the 361, they become a lot more probable in that case. In that particular case, the next level up would be about $8.15.
Yep, and we actually have a gap up there.
Yeah.
So we have a gap,
so we'll
I think,
that.
at like 870, I believe, somewhere around that.
Yeah, yep, that's right. It's hard to see, I guess, on my screen here, but yeah, there's definitely, it's from about 870 up to 820 or so.
Yep.
So, yeah, basically that tells me, like, the second that this breaks and holds, I think, about $6, because our 200-day, like, simple moving average, it's going to be, I think, beginning tomorrow, it's going to be, 608 on Friday, so tomorrow it's going to be closer to 603 to 597 or so, give or take, whatever the rate of decay was on that. So if it gets and holds above that, I think there's a lot of support here to suggest, or a lot of evidence here to suggest that, that $7 to $8 range is definitely next. Coincides with an old trading range, and then of course there's that gap. So obviously, since there's no volume gap there, any algo bot that's programmed to find these next fib levels, on upward momentum, is just going to completely blow past that, and the 9 to 10 level would make pretty good sense here, which is the 361% extension here.
Yeah. Now, I've got a question for you as far as, like, a bunch of people were asking, like, obviously with Friday, we finished over $5, which was a huge, level. So a lot of people are like, when does that actually come out? Like, when are we going to see that kind of thing? So, they were like, are we expecting a move down on Monday and then Tuesday and Wednesday they've got to buy all those shares, or how is this going to work? That's what they were basically asking.
All right. Well,
right.
I guess this is the part, I guess, where, I have to say I'm obviously not a licensed financial advisor, but I mean, we are retail, we're here to kind of help each other out, since obviously the big boys, if we hired one, they would be asking for an exorbitant amount of money to do this. So I can do this, doing this in good faith, obviously, but my best understanding, and this is how I will play it, and I'll go as far as to say that I'm looking at the hourly chart here on my Webull. I see here that, RSI has definitely cooled down, which is a good sign. We've held our price strength, in the mid fives, which is also really good. We're currently holding support at the 20 SMA, and I have to be honest, I'm a little nervous about this $5 level, because that would imply that we've mostly, retraced back to the top of our support, which in Elliott wave theory is kind of a big no-no. You want it to be able to hold above, that second wave up, as it's trying to form.
Correct. And that's actually why I expect them to attack that as heavily as possible, because they want to make sure that people don't get into this play.
Yeah. They'll have a chance to, I think, first thing on Monday, because I don't know if you had a chance to look at the futures, but they are just getting utterly destroyed right now. So there'll be a good chance in pre-market that you see this. Not saying it's guaranteed, but more likelihood than not that it's a little bit red as opposed to green, like say something in the 530s to 540s to start. But it's on such low volume that it ultimately doesn't matter. But that's just kind of what I personally expect here. But with that said, though, if it does happen to get down to $5, and it holds us pretty well, that would be a very positive sign, because that would also coincide with stochastic RSI, kind of bottoming out at 0.
Yep.
And any time, if you've noticed here, like especially as we've been forming these patterns here, like we go back to April 6th, held 50% of its retrace, started moving up, and then we had a nice move up, and ultimately went to 100% extension here, had a cool down, retraced another 50%, and then we saw it reach the mid sixes this week.
Yep.
Now in the hourly, we're almost down to the bottom again. So obviously this is, if we have, let's see here, where we're at right now, we have 1, 2, 3, 4, 5, 6, 7. It's about 2 to 4 periods or so where, it would need to bottom out. So if there's a decent amount of buying pressure, but we still see it level off in the mid fives, that would, mathematically get the stochastic RSI back to, zero, where it could start curling up again. And you would most likely see that in the 5 to 550 range. And then the second it starts curling up, there's more volume. RSI is going to be cooled off enough where it's not going to be overheated. That's something else that we absolutely need, in order to continue the next leg up. It'll keep the daily RSI just low enough, I think, as well, to, where it's in the low 70s, where when we do squeeze, like 80 to 85, I think has historically been about the top where ATER starts to, it caps off during a squeeze run. And, so that gives us, it actually works to our advantage. I think it'll be one of those things. I think in your words, Anon, you say that, it shakes retail, it gets people to sell, but if that scenario pulls out, like, if anything, I'll be buying before I sell again, because
I'll be selling $4 puts again.
Mm-hmm. Yeah, selling puts. Yeah, that's also another great way to get the market maker to hold some shares on your behalf.
Yep, it adds some pressure, and at the same time, you can get some premium out of it. And for anyone that doesn't know, just so I can clarify this, if you sell a put that is actually bullish, I know a lot of our Discord's learning this kind of stuff, and we're trying to teach people, but if you buy a put that's bearish, if you sell a put, though, that is actually bullish. It's because you're basically committing to buying the share price at that level.
Yeah. It's also, bullish for the sense, too, that it's at a locked up price, and it's guaranteed to, depending on who collected the premium, like, say, like, you sell a $4 put with a $40 premium or so. So, like, the cost basis to you buying it would be about $4.40, for a 40-cent premium. And then on the market maker side, they get it as if they sold it to you for $3.60. So they make money if it goes below $4, but you get it at a fair cost basis, which frankly at $4 is still laughably cheap for the stock.
Yeah.
So it's a good way. That's a way that I like to think about, selling a cash secured put as well, is that if I want to, like right now, I would think that, maybe $5 to $6 a share for some retail investors, especially with small accounts, it might be a little cost prohibitive where, why buy ATER at $5.50 when you could buy it at $4? A cash secured put is a great way to do that. Not only does it get you your shares if the price drops below $4, but if it doesn't drop below $4, you've collected a premium, by holding that cash collateral for a week or two. So it's a way to generate passive income, even if that strike price is not hit.
Yeah, and if this is going over anyone's head, we'll, you can ask questions in the Discord. I just wanted to also just throw out there, everyone knows this, but we're going to say it again. None of this is financial advice. This is just two retail traders talking about their own trading strategies, and none of this should be taken for, it's basically just us talking about the stock.
Mm-hmm. Yeah, 100% echo all that. Yeah, it's just, I'm not obviously offering financial advice either, but I'm just thinking about how I would be doing this personally. And I think it comes to with, just kind of understanding the due diligence, where the stock should be traded, and just kind of getting familiar with it. Like I've had more success trading, I think, by learning, 5 to 10 stocks extremely well, as opposed to trying to make a watch list of 100 and thinking like, oh, this is at a bottom, let's try to trade it up. But when in reality, it's a lot more complex than that.
Yeah.
And, I think in this case, it's good to think about these things as well, because like, in addition, like obviously most retail traders who are listening and who, frankly, enter any play, like if it's, Wish, AMC, BBIG, CEI, you name it, not everybody's only an ATER right now. You're going to want to understand the stock pretty well. And I think the more you understand it, the more you understand the due diligence, you ultimately, you want to make money by seeing these stocks go from $2 to $3 up to, 5, 10, 15, 20, whatever your end price target is. Like you decide when you sell, obviously. But it makes it a lot easier, to make those decisions, I think, when you know it. But to also, like, kind of understand how it trades, too, and especially in a volatile time like this, where when you get more comfortable with the options trading strategies, like, selling cash secured puts, selling covered calls on your shares, or just straight up buying call options, understanding how the individual Greek works, can really work to your advantage. So in addition to just holding a long position and waiting however long you need to cash it out, you can make a little bit of passive income on the side. And that's why I like the options angle to it, because it gives me a way, because again, in my own situation, I have some pretty big bills that I need to continue paying here. And, I travel a lot, like I live in the middle of the country here, away from my families and stuff. So I need to leverage, my holdings, to help make some passive income, and selling puts in this example, or selling calls on my shares are great ways to, make a little bit of passive income on the side.
Yeah, absolutely. Especially when you have, if you've got a couple thousand shares, that's a very easy way of, generating some extra income.
Exactly. And I think anybody that was on the Discord on Friday, and anyone can actually they can search the conversation by, searching our names and whatnot. But one thing that I did actually before close, I sold covered calls on my shares. I think I went for, I think it was $8 or $9. And the reason I did that was because we're entering a 3-day weekend.
Yep.
And anyone that understands theta decay will know that, by the time that Monday at open rolls around, they're going to be half of their value no matter what the closing price was. So I can close them right at open. By me closing them, the market makers have to unwind a short position. That helps me collect premium. That helps the stock in a very little way by unwinding, I don't know, the delta on those was probably $28.30 or something like that. So probably about 150 to 200 shares that they get to buy back from the marketplace the second that I close those. So you can use this gamma unwinding as an indirect way of, helping things out a little bit while also putting a little bit of extra money in your pockets.
Exactly.
I like to do that anyways. I'm sure you do as well.
Yep, I do. So I was going to say, a bunch of people are asking, is it possible this thing can hit, $8 by May 20th? In my opinion, yeah. But, I mean, let's hear yours also.
Yeah, so, in my opinion, the short answer I would say is yes, absolutely. In my opinion, I think we are much more likely to see that shorter rather than later. But only, and I mean only under the condition that we continue to see the same amount of volume that we have been over the last 2 weeks or so. Because the second that the volume turns off on the stock, it's like anything else. Anyone that's ever played a meme stock understands, volume is very much everything here. So if we go to open, let me check my daily here. So the volume on Thursday or on Wednesday was 161 million. On Friday, it was only 99 million, I guess so. But that's still really good volume.
Yeah, that's still very good volume compared to when we were a couple weeks ago at 1 or 2 million volume total.
Yeah, we're averaging 2 million, 2.6, 1.9, 1.6, 3.0, 3.2. Yeah, so very low. But I think we'll have that answer pretty quickly, though, because if we see in the first hour or two of trading on Monday,
if there's some volume, then we're good.
Yeah.
And we've had all the other thing to talk about it.
Yeah. So I think that's going to be the first clue to everybody. If it's, if we go through, 2 hours of trading on Monday and the volume's down below 10 million, for example, that's going to be a huge red flag to me. Give it to you straight. That's not going to be an encouraging sign to me, because 10 million, 2 hours in trading implies, by the end of the day, trading always unwinds by the end of the day. So that'll be probably 30 to 40 million or so. Yeah. So unless we get a situation I think, what was it? I think the 5th or the 6th where, it looked like the volume was low. And then within the last 10 minutes, we really had a 10 million volume spike. I don't know. That's way too risky, in my opinion, but you have to get a little bit lucky, I guess, with these squeeze plays, and that was certainly one very welcome sign I think that we had.
And that I think, I was going to say that I believe that one was it was a T+3 that day, wasn't it?
I'm not completely sure, actually. You would.
Yeah, I was going to say I think that's what it was. They basically waited till the end of the day to deliver all those shares because obviously when you buy through a brokerage, you have that T+3. And so I think they were basically just holding off, making people think that this is all done. But the last couple of minutes, they just had to buy all those things, so they just did it.
Yeah. Yeah. So Okay, well that explains that a little bit. I actually didn't know too much about that. I know that there's the T+2 settlement dates, and then there's of
For the
course
options.
the.
But yeah, for brokers, it's actually T+3. So what ends up happening is, say for example, all these people are starting to like hear about Aterian, they buy common shares. Well, those common shares are getting routed off through dark pools and off exchange, and they're basically neutralized. So it's not creating any buy pressure immediately. But what it is doing on the back end is the brokerages have basically that day plus 3 days to get those shares out. So if you look at like the volume spikes, usually within basically 3 or 4 days, they've got to deliver some of those shares. So if retail's starting to buy on these, like for example, if retail was coming in on Friday and buying up in Thursday and Friday, right? Those ones won't hit till next week, like midweek, until the end of the week.
Yeah, that makes sense. Yeah, yeah. I think this is the spike here. Yeah, 1530 here, where it went from 1.2 to 2.9 million. So there's about a little less than 7% of ATER's float bought in the last 10 minutes there, just to
Well,
cover that T plus.
it's exactly, and it was just covering that, because they don't have any, like at some point they either eat the FTD, but which they're already on the reg show. So the reg show, for
Mm-hmm.
anyone that doesn't know, just I need to kind of break it down because I know some people don't understand all this stuff.
Mm-hmm.
The reg show basically is a securities threshold list that is created basically to show when you have a certain amount of the float that is actually not being, it failed to deliver, you get placed on this list. And the longer you're on that list, technically after 13 days, the clearinghouses are supposed to force, whoever's in violation to close their positions or come up with it depends on what side they're on, but in this case, it's with shorts. Now, that didn't happen last time. We went 30 days on the reg show, and it never closed. However, though, what we ended up finding out was I called Finner about this, and I said, what are the situations where, for example, somebody would, be able to go that long? And they were like, what's an aggregate? So like some brokers may have had that, other brokers would have pushed it down the line, so you can actually go longer without being in violation. So I think that's what happened last one. It was like staggered throughout for the reg show, but for this one, they've got right now, I think we're going on 3 days, I think it's 3 days on the reg show. So
Yeah.
another 10 days, and they then risk somebody actually closing them out if they can't figure out where to get these shares. So within 10 days from now, if we start calling the SEC and going, how come this isn't being resolved? We actually can quote up I've got all these filings that I have out when the SEC puts out documents, I've saved them all. And so that's my plan at this point is to, contact them and say, hey, listen, like, I want to know what's going on with this. And I'm going to call you guys every day until I find out why it's not being closed out after 13 days. Because they let Overstock.com go 666 straight days on the reg show when it clearly stated 13 days. So,
Mm-hmm.
all right.
Yeah, no, that's good explanation. Yeah, and learned a couple of things there listening myself here. So, yeah, yeah, and that'll obviously play a lot. So I think it'll be very relevant too, because I think this price action started on April 4th. So I think by May 4th, we're going to start to see a lot of these FTDs come due.
Oh, yeah. And then we're also
Yeah,
going to get the list from the beginning of April by then. So
yeah, so
the
yeah, we're
FTD
getting
data,
to
yeah.
basically. Yeah, so this will definitely have legs, and I remember the long DD post I did, I think last week, and we looked at, kind of we took the Wyckoff viewpoint of, what does it take to really trigger a squeeze, and for 5 of the biggest ones, that we had within the last year and a half, so GameStop, AMC, Clove, Car, so Avis Auto Group, and then
Spurt, support.
ATER. Yeah, so
ATER
they all took, I think whenever that buy signal was triggered, I think it took anywhere between a few days to up to 2 to 3 months or so for the thing to entirely materialize. And I think the reason it takes a long time to do that, I mean, obviously, aside from the initial run up, which we're, I think, going through right now, where, $8 is, almost a necessity, to get that, to kind of confirm that, the big part of the squeeze, will be on the horizon, I think, after that.
Because the amount of in the money calls at that point, because if you start looking down the line, the options chains, I mean, there are people
Hmm.
a year out, but they still have stuff that's in the money right now, and they may not
Yeah.
have to hedge that. But if those people, if you have January 2023 calls and they're in the money, I mean, if they
Hmm.
were to be executed or exercised, like that instantly would cause issues for them because once you start, I think, did you ever look at support.com? Do you ever see that one?
No.
Are you able to pull up the ticker real quick?
What's the ticker?
It's SPRT.
Oh, sport. Yeah.
It's support.com. So
Yeah.
this run up to 60 started
Hmm.
down at like the $5-6 range, and it kind of went in waves, but it took a while. But what ended up happening was like they basically bought up the entire options chain for the entire float because it was a low float stock, and they had locked up the entire like literally every share outstanding was in just the like $5 like range, and it
Hmm.
just once it went off, it just went off. Like they had locked up everything. Like there was no possible way that they couldn't squeeze.
Yeah. I think we saw that with SST like not long ago as well. Well, I think it was like 2 weeks
Yeah,
ago where it went from 15 to 20 and then just ballooned up to
yeah, it was like
$37 like
36,
extremely
37.
quickly.
Yeah, exactly.
Yeah, so yeah, it's interesting here, and yeah, I'm looking. Yeah, just pull it. Yeah, just a sequence here on. Yeah, this is unusual here. Not
Yeah,
often you see a stock, where kind of starts its pattern. It looks like 620. That's about where I would put that on this particular analysis here. But it just touched 50%, touched 68%, then just went to 161% one day, and then once it cleanly broke above that, then 261 was easy, and then
just that.
people woke up one
Yeah,
day and
and it was like
just
60.
God, this is disgusting. That changed a lot of people's lives, especially if you cashed out up here, in
Yeah,
the
exactly.
40 to 60 range. So it's ultimately what can happen, and I think the thing that, in my opinion, what a lot of retail will need to be patient with is May 20th is going to be the next really really big option chain. It's been getting loaded up, I think, very pretty steadily over the last few weeks. People like me, I've made this pretty clear. Like when I've been scalping options, I've been going for the May option chain, because like I can get in, I can get out without, the threat of theta decay really
Being
destroying my
horrible. Yeah,
investment,
exactly.
in case, you always have to be prepared for the worst case scenario. But the closer we get to that date and the closer, and assuming that ATER continues to hold its price strength, between the $6 and $10 range at that point, those May options, like they're going to start getting loaded and loaded and loaded. And like as every week goes by, if we continue having even just 5% of ATER's float, getting locked up and in the money options being delivered to people like me and you, and people just willing to hold it, frankly, the more options that get, bought up and held, that's a smaller and smaller percentage of ATER's float that ultimately gets to get distributed around. And then at some point, you'd have to imagine that, thinking bigger picture here. So this is where I think ATER is going to need to be. Things are going to happen, I think, outside of this smaller dynamic that's been controlling the short-term price action. That has to do with the macroeconomics, just kind of what's going on right now. Like we know that oil prices are going up very quickly. We see the futures are getting, destroyed right now, which means a lot of the FANG stocks, all the every hedge fund's favorite stocks that they like to go long on, they're going to have to start selling those off. And if they're holding a big short position on ATER and they get margin called, they have a decision to make. Do they sell their long positions or do they close their short positions?
Sure.
And every day that goes by, that cost to borrow is really high on ATER and it hovers there and there's lower and lower and lower liquidity. That's where you see, it could reach this 161 or 261% level as sport did, and then you wake up one day and then suddenly it blows its lid off.
Yep.
That's the type of condition I think that's going to be necessary in order to get ATER to 20, 30, even more than that. And every day that the, the float, continues decreasing and the price continues to hold strength, like it makes it an increasingly likely possibility.
Yeah. So, like for example, if you pull up Aterian again and go back to March 8th,
March 8th of this year?
Yep.
Okay, so right here it looks
Which was
like.
earnings, right before earnings, or right at earnings. I think it was the day before earnings, if I remember correctly. But if not, it's very close to earnings. That
Yeah,
is
so I
when we,
see 220.
yeah. So
Go ahead.
the 8th is when we hit 100% utilization on Aterian.
Okay.
So we've been 100% now for like 39 days or something like that, maybe
Hmm.
more. So that's
I see. So.
right there is where we hit 100% utilization. So my question is, obviously we didn't start really moving until April 4th, but how do we hit 100% utilization there, and yet
Mhm.
somehow all that volume,
Yeah.
all this volume that's been going through, where's that coming from?
Yeah. I mean,
Isn't that
obviously
isn't that a mystery?
it is. Yeah. It's ATER, if I'm not mistaken, had. I mean, it wasn't exactly a blowout earnings report like
No,
the last one that they had, but it was still showing, that they're making revenues. They're doing everything they
yeah,
can
revenue
despite.
increased. There was a bunch of things that happened with it. It wasn't, they didn't, it wasn't like a huge beat. It wasn't a huge loss. It was kind of just like as expected. They tried to push it down. We hit the all-time or the more recent 52 low, which was the 210 mark. Which once it went below 245, which was current assets on their balance sheet, that's when I had a huge issue because I was like, okay, now you're selling the stock, even if you discounted the inventory, because obviously you couldn't just sell inventory for like full price, but like even if you discounted inventory, it shouldn't have been that low. And that's when I was
Yeah.
like, something's really wrong here. And that's when my DDs started really increasing and being like, something's wrong. Like that's greedy. Like they're basically trying to get the stock to go to zero. And
Yeah.
that's when I was like, because current assets, for anyone that doesn't know, that's your cash, your inventory, your accounts receivable, your hard assets. You usually don't see a stock get pushed down that low. So
Yeah, especially for one that has the revenue streams, and even when you consider its debt, like it's still on a very clear upward trajectory, and all it's doing, it's putting good people out of potentially out of work. If they get their way and they just short as many ATER shares as they want to, with the intention of sending it bankrupt or forcing it to go private again.
exactly. So now look at that. So we hit a utilization of 100% on the 8th. How is it
Mhm.
possible to trade this much stuff and have that many more shorts come out and the short percentage increase when you were already at 100% back then? I just want people to think about that. Like,
Yeah,
how is that possible? We had a day of 145 million volume, and the short interest on that was like something like 90 million. Or like I understand you can
yeah,
trade short stuff back and forth and close positions, open them again, but like that's a lot of volume. Like I think I
yeah.
did one of my DDs. I think I calculated it out, and we had traded something like. Let me pull up that. But you go ahead and talk, and I'll find this statistic that I pulled up just from the other day.
Mhm.
Just
You
tell me
want
your
to
thought.
share?
Yeah, just tell me your thoughts on like how would that be possible with 100% utilization way back then, and now we're like almost 40 days into it, and somehow they've managed to increase their short position another 6-7%, and you know have
That's
massive
a
volume.
that's a good question. It's I mean, you create synthetic shares, I guess, to put into the float, or
Hiding
if
the options
you're
chain.
the same hedge fund, you probably abuse the short exempt restriction here and say, hey, I need to borrow some shares because I clearly want to short the earnings report because I think this will be the top. And in fairness to this particular short, if they decided that 285 was the top and they closed out a couple of days later 210, they probably made a pretty decent profit. But I know from your DD, and I think we know from any of the available short interest data that they probably did not close down here because it was 100, 100, 100, and guess what? Everything's going up from here.
Yeah.
But it makes me think whoever did that is just straight up stupid here because, thinking from the perspective of, a hedge fund algo bot, especially the one that's probably on our side, the one that's helped retail get to, get the stock back to 550 right now. I'm looking here at, I see a low of, about 225. I see RSI's bottomed out at about 35. And then by the time it reaches 210, a lower low, the RSI is actually up to 33. So you have this bullish divergence here of increasing RSI on decreasing price. It's not the most obvious of signs here, but like if I was a technical trader saying, hey, this is a good company, it's trading below asset value, and clearly it's due for an uptick, like this would have been a very, very great buying opportunity here. And even for the short term here, if you go from, 210 to 250, hold through, what was the price here, goes, or no, it was a little higher than that. Yeah, reached almost $3 here, goes back down to 230, and then that's when all hell breaks loose. Now, you got too greedy here. You didn't close your position, when you had a chance to make profit below 280, and whoever shorted under $3 really is fucked.
Yeah, I mean, to me, that was the ultimate greed. They were like,
Yeah.
because we had no volume. We were like trading 1 million shares a day, and they were just like, we're going to bleed this thing out to zero.
Yeah. Yeah, and this is a good segue here for what I kind of want to say next here is the Wyckoff sniper tool. So, yeah, and some people, have opinions on Astra, especially since he has a tendency to favor his, GameStop, GME, Bitcoins, and pretty much anyone here. But anyone that knows Wyckoff theory. So Wyckoff theory is basically, for people that are newer here, it's kind of an overarching like trading theory. Like for a lot of low to medium volume stocks that go through, typical cycles where, you have a downtrend or you have an uptrend, and then there's just this consolidation phase. Like Wyckoff's a way to kind of explain these consolidation phases, I guess, for stocks and predicting like when they're going to move up or down or so. And they figure that out. And, for example, like when a stock's going down, like you have these support levels, you have these resistance levels. Those are typically determined at where a lot of the trading volume occurred previously. So ATER has almost always, like up until about November of last year, it's traded between about $3 and $20. And of course, before that, there were periods of time where it was up to $25, $30, $50. Well, not 50, but 48. But you get the idea. There's trading volume there. So therefore, there's people that are probably still holding the stock from here. So that's where you form a, kind of one of these volume clouds here where people have been holding the stock for a while. The green clouds, on the other hand, they're positions where people entered pretty low. That's a support, that's a supply zone. People want to buy when they think that the stock is cheap. So the green clouds ultimately in this particular algorithm represent buy zones where people think that the stock is cheap. They want to go and they want to ride it to somewhere above this red cloud. So any distance here between the supply zone to the demand zone, like if I bought back here in July of 2021 at 17 and I sold at $33, I made almost 100% profit. Like, who doesn't take that home with them? If you're using Wyckoff theory, you apply it to a T here, you made some good money here.
Yeah.
But that's kind of where this whole short thesis comes, into play here and kind of makes it pretty clearly look like, someone's not just trying to make money off a short sell here, but really trying to send the company bankrupt here because, starting probably around, it looks like, mid-July, going into August here, like, the price is kind of dwindling down into the spring region here, but then it goes below it. So, like, at this point, starting in about late July of 2021, the stock price starts trading below where the vast majority of ATER stockholders have been holding it. So these short positions, at this point, they're selling it below, they're laddering it, they're, selling it down and down and down, thinking that they can buy it back at an even lower price. And then sure enough, they're able to do that. They get the stock from $8 to $4 to $3.
Yeah, because that earnings call.
Yep. But then obviously someone looks and they say, hey, something seems wrong here. And, over the daily time frame, the spring region isn't really moving here. So a lot of this volume is probably being traded back and forth between, institutional short sellers, just passing it back and forth most likely here because the vast majority of people like you and I that own it, we bought one in this cloud region here. So finally, it starts going back up. This here, I would venture to guess is, they saw the earnings report. They're like, okay, it's time to take profits. If they sold it here, they can buy back here for profit. They do this. And then you can only buy so much though before you get to this oh shit moment. This is my cost basis. Now I better buy as quickly as possible. And that's where when you get back to the spring region here, it just whoop, creates pretty incredible squeeze here. So in this case,
Sure.
if
And they probably
you
bought
know,
calls and made money on that uptick, and then
yeah, yeah, definitely did. But yeah, we saw that once, and then we saw it again. Where got back to the supply zone. Now, the reason probably didn't go much higher than $18-19 here is because all these the volume cloud here as time went on from July into August here, people were averaging down here, so that's what brings down this supply zone here, or the resistance, I guess, in this particular case. People want to offload, like, and in fairness, if I bought a stock at $25 and I was averaging down, like, at some point, you have life events, you need to cash out your positions, you want to move on to other stocks, totally normal things. People want to cash out, but at this point, people have averaged down, so the cloud comes here. This is where people unloaded most likely, and it creates, kind of an exchange of volume here. Now there's new Aterian holders, the old ones kind of get out here. You see the cloud expand a little bit, so you can tell that it traded pretty organically here. But at this point, a decent number of short positions, I think, kind of got out of their things here.
Yep. And I was going to say, if you remember when I showed you my screen, we don't have to do it right now, but if you remember, that's actually when retail FOMO'd in. That's when the most retail traders FOMO'd in, was that right there, that run up.
Yeah. So yeah, I could probably, you like to use the ADL and the
OBV and the money flow. But yeah.
Yeah, so yeah, that's where ADL, right about here where it just went, it just kind of bottomed out while OBV just kind of remains.
Yep, and that's where retail FOMO'd in. They were like, let's do it, coming to Yeehaw.
Yeah, so they were buying where there were available shares, in fairness, and then a greedy short seller obviously kind of gets in here and forces it to trade well below the spring region here. And that just kind of persisted for months and months and months, and then for a while they were doing a pretty good job of getting the volume to be low, where they can just turn on their algo bots, let them trade 1 to 2 million shares or so, try to get them work down a few pennies, get a few other retail traders in, but
yeah, and that folding knife was getting retail traders to just get driven nuts. I mean, I've obviously our Discord knows very well about that, and I just had to say, listen, at some point this gets turned around, and when it does, it's going to be violent.
Mm-hmm. Yeah, that's with every short squeeze. Yeah, but I think the thing that kind of I noticed, like, as I started using this tool a little bit more here, that you can tell retail was buying, the more I think about this cloud here. So I was saying to everybody here that this red cloud represents, kind of, it's a resistance level, but it's represented by, the volume at which old shareholders bought at. So, like, meaning they're looking to exit there. So these people here have been averaging down. You can tell they've averaged down, because we have this extremely rare case, compared to even some of the bigger short squeeze names like, the GME or the Avis, case studies that I looked at. Retail averaged down to, it looks like the mean retail holder, somewhere between 460 and 626. But this Wyckoff Spring, where people still want to buy, where a lot of the demand is well in the 8 to 13 range or so. So now that there's this excessive amount of shorting here. We've traded well below this. There's still obviously, the divergence is still continuing here. OBV's, ADL kind of, I guess at this point here, kind of leveled off a little bit, but OBV is gradually increasing, from 700 to 720, 730 million or so. So that means these short sales are eventually getting bought up, and that's what's bringing this resistance cloud, I think, back below the Wyckoff Spring region. And now that we are right at the intersection here, this is where, both patience but optimism, I think, are equally warranted here. We are fully sprung here. This is as coiled as you can possibly get, using this tool here. Like, everybody in this red cloud here, like, most retail, I think, at this point, if not everybody's going to be very profitable. There's probably still a few up in the 8 to 9 range that need to be caught here, but this is one big spring where people understand that this is fair value here, and anybody that decides, hey, I like Aterian, Aterian's an $8 stock and $9 stock, and they want to ride it up to 10 or 20, well, guess what? All the new buyers in this range are probably going to get very rewarded when, short sellers, they finally have to close their positions and they're going to have to buy back from us at name your price, basically,
Yeah. And
I think,
it's gonna be
go ahead,
violent.
sorry. Yeah. So,
All right,
so,
I did find the numbers. So on Friday, I had written that DD, and I'll just give you. We're going to kind of go back, and I just want to read this out. So our utilization since March 8th, when we hit 100%, ATER has traded, and this is a couple hours. Like I think I wrote this at like 2 or 3 in the afternoon. So this doesn't account for everything, but at that time, Aterian had traded 760 million shares in volume since
wow.
then. Now, remember, this is 100% utilization stock. From that date, they've traded
Yeah.
760.55 million shares of volume. The free float is 26 million. And they traded 760.55 million shares of volume. And just in the last 8 days, as of that Thursday, we had traded the exchange reported aggregate short sale volume in just those 8 days, and this is going to be higher because this number will not be. I missed the last like 2 hours when I wrote this. Was 233.46 million shares traded short volume in 8 days.
Mm-hmm.
So just think about that: 760.55 million shares of volume. And then just in 8 days, the last 8 days, basically since April 4th, that's when I just started doing the exchange reported aggregate volume, they traded 233.46 million shares of short volume in 8 days on a stock that has 26 million free float. And that float was already locked up. Like the float was locked up on March 8th. How's that possible?
Wow. Yeah, it's insanity, but
that's why this spring area is getting tighter and something's going to give.
Yeah, exactly. Like, I mean, I'm an atmospheric physicist, that's my day job. And I could tell you, this is anytime you compress something, and you put it in an area of instability, and that instability region's a screen region, like it just has real potential to just be absolutely explosive, I think, from here. Again, I only say potential because there still needs to be a few mechanisms of working. The volume has to continue. Russia can't nuke Ukraine or do anything crazy like that because everything will sell off at that point. Like, everybody's going to want their money and run. But barring, extreme things like that happening and, just kind of everybody kind of keeping in mind, like what has to continue happening. Like, if people see the price going down on low volume, like,
yeah, there'll be people that get out if they don't think that it's going to continue, and that's what their goal for. I think the shorts goal is they've got to scare retail out of this because at this point, if retail continues to come in, buy, hold, and lock up like the options chains and also shares, I mean, they're trading shares that like can't possibly like they don't have like that's what I'm saying. Like these waves that are coming up, I think, are because they just don't have these shares, so they have to literally bring the price higher so they can find people that are willing to sell those shares.
Yeah.
Because the amount of shares that we have available is not there. And so they have to basically step ladder it up until they find, but the problem is the higher it goes, that's more pressure on these, shorts. And so they keep trying to keep this price down, but eventually this is just going to pop.
Yeah, exactly. It's at that point, like, do they get margin called or do they really think that it's going to hold? But that's the thing, though. So, like, as long as the cost to borrow, I think, remains relatively high, like,
every day, it's tick, tick, tick.
Yeah, so at that point, like, the borrowing fees are going to be equal to what they took the short position out. So they really need to be confident that Aterian's going to go bankrupt, in order to actually profit, because otherwise they're just going to be pissing away a ton of cash, holding that short position open for a period of time.
Yeah, and I know they don't want to lose to retail because the second it's kind of like you go out and you punch the biggest guy in the jailhouse, when you first get there. Like, you can't let anyone know that you can be defeated as a short
Hmm.
seller. But
Yep.
in this case, it's looking more and more like, and that's why people are like, well, how could this be? Like, listen, I was there for GameStop, and I was there for AMC, and I was there for all these, squeezes. I was there low too. I bought GameStop in the teens, but
Nice.
this feels very similar to how it started. Because at first it was like, okay, it was moving up in like chunks, and then like all of a sudden, when Andrew from Citron for GameStop came out and was like, I'm going to tell you why this is going to go back down to like, $5 a share or whatever, when it was sitting in the teens, that's when it really, or, maybe it was like at the 20 when he said that remark, but like, that's when basically it just caught fire. Because the more they
Hmm.
tell people, hey, this is not the play, the more people are going to be like, yeah, I don't see that anymore. Like, we have bots on, like, I don't know if you noticed, you probably can't see our stream, but like, we have bots on
Yeah.
here telling us to sell at $7. Don't be greedy. Got it. Like, I'd have to go back and read some of these ones from the bots, but like, we have bots on a small, tiny YouTube channel telling us to sell this at 7. Like,
Yeah.
how much more confirmation bias do I need? Like, I haven't seen bots since GameStop or GME. Seriously.
Yeah.
When was the last time you saw a
It's like
bot
it's
talking about like BBIG or like I haven't seen bots for a long time.
yeah, because I think compared to I think when you zoom out and you think of all the favorite retail trades right now, like I think Aterian, I think people they probably realize like, oh, we finally caught on to like the real squeeze play because like compared to like BBIG is a pretty good example. Like their float's way too large, to sustain any sort of short squeeze, and even if there was a lot of short interest on that particular float, like they still need, we don't have the institutional headwinds that that particular stock has. Like
Yeah, there's warrants and
every
there's
day.
all sorts of but I was gonna say like Aterian's float is small enough where it's becoming a
Yeah,
problem.
yeah,
Like it's there, you could potentially have the entire shares outstanding locked up in the options chain.
yeah. Whereas that's nearly impossible to do with a stock like BBIG for comparison
Or
stake.
Prog, or one of these that has like 200 million or 300 million shares. Like, that's not going to happen. But with Aterian, you
Yeah.
could legitimately have 60 million shares locked up in the options chains by May.
Mhm.
Like,
Exactly.
that is
And like,
possible,
yeah,
and they could be
that's
all in the
exactly
money.
right. Yeah. We don't have to deal with anything like this where, you have, 150, thousands worth of shares, like in high delta put options, that are getting thrown against you here. Like, this is, I'm not trying to shit on BBIG, obviously, right now. I'm just trying to say what it is right here. Like, this is a legitimate headwind, if you're trying to play the stock right now. Like, and when you see these floor transactions with the, these non-electronic multi-leg transactions going on here, like that's a significant headwind, and you really need a lot of new retail buying in order to fight that.
Yeah,
And really, since late February, that's just not been the case here. But when you compare that to Aterian, Aterian at one point it's been very much below BBIG's price, for example. So like it was at 210 at one point.
yeah,
BBIG's been mostly in the 250 to 350 range recently. So I guess it's taken a while to come here, but
it's fine. I mean, I was just basically coming up with the fact that like it's harder. Like, the larger the float is, the harder it is to have these violent reactions, because you have to have massive amounts of volume to move that.
yeah, exactly. And I think you kind of brought this to the forefront in a lot of your DD, but the fact that Aterian does not have a really bad warrant situation that it has to deal with, until September, means that any short positions are going to have to wait a really, really, really long time in order to use warrants to cover short positions.
Yeah, and that's one of their favorite tools, is because the reason why, just so anyone out there understands this, the reason why warrants are so important for a lot of these short hedge funds is because it basically gives them an escape hatch. So you basically say, okay, well, they've got the X amount of warrants at this price. That means we have a set price to actually cover at. So these guys will go ahead and lend out these small cap companies through maybe a buddy of theirs, or but they basically get access to those shares and say, okay, if this goes wrong, best case scenario, we short them down to zero and we get tax free money, and we can bury our shares that may or may not be on the up and up in the obligation warehouse. But worst case scenario, we actually have we've got these shares at the set price that we can go ahead and do. So if it runs, we got these warrants that we can exercise and then go long on if we need to. And if it goes our way, then we'll go ahead and just sort this company into the ground.
Yeah, exactly. And since they're buying, the warrants directly from the institution,
And they're
it has
cheap
the
usually because these companies are all like cash hungry and they need the cash, so they are willing to take these deals with the devil essentially, and it's not good because they're basically paying pennies on the dollar for these warrants, and they have they end up with like what was it, like some of them are like 200 million warrants, and it's like that's a ton of dilution. And that also
yeah,
means that these companies get to get shorted into the dirt with like 50, sets of 50 million warrants, and it's like
yeah,
that's hard to
yeah.
fight
Like,
against.
just like see what happened to BitNow over the last couple weeks. Their float went from what, like 80 or 90 million all the way up over 200 million.
Yeah,
From an offering. I'm
yeah.
not sure if it was entirely
It
like
was an
from
ATM.
an ATM. Yeah,
Yeah,
but still, it's when you're a struggling company or you're just getting your business off the ground, like
yeah. You need
it's
the
a
cash.
necessary evil, unfortunately. And I think that's kind of the big thing. Like, how do you find a stock like Aterian, in a sea of small caps, that are trying to make it, especially in these market headwinds right now, where most stocks are red, since about February of 2021 last year.
Yeah, I mean, so like that was one of the reasons that attracted me to Tyrion was the smaller float, and I was like, because that's an important thing because they still are small enough where if they need to grow a little bit, they could dilute a little bit and still be way better than some of these ones that already have 200 million shares issued out.
Yeah, indeed. So, I mean, that's where my conviction lies. It's small. There's no risk of short term dilution, and I'll say this too, just kind of as an out of the box idea here, because I don't know like how much more debt Aterian needs, but like if this does end up becoming a home run play and we see 20, 25 or more at this point, like if Aterian decides at that point, like,
We'll
hey,
do
we
an
have a
ATM.
chance to
Yeah,
not just address our debt, but really like give ourselves in a good financial situation, and they want to use a little bit of their authorized float to, do an at the money offering when it's at those prices, like,
yeah. That
you
then
know,
off the balance sheet alone, like if you had paid off all your debt and you now sitting on like say they raise like 200 million in cash. Now you've got 200 million in cash that your balance sheet improves, and that means your stock price is now worth like 15 off the bat.
yeah,
So
exactly.
then you might
Yeah,
be
and you've
like,
made
oh,
it
I
a little
bought,
bit more
and
liquid.
you bought shares at $2 a share, and now all of a sudden you're legitimately, this is a growth company that is in a good position. So that's why I'm almost like this may not just be a short term thing. Like these guys may set themselves up for like a long term good play.
Yeah, indeed, and that's really the ultimate thing. Like, I mean, first and foremost, everybody should make their money. Like, take some profits. Do some nice things for yourself, save for retirement. Obviously, you got to make good financial decisions. But that said, though, like,
It is an
ATR is
interesting
still a
thought.
very
Yeah.
small company. 5 to 10 years from now, like, if they continue, in the trajectory that they're at, like, even if you're buying Aterian at, 5, 10, $15 in 2 to 3 years time, like, that could be, the steal of a century, if they continue to be able to raise money without having to rely on warrants or
Yeah.
anything like that, where it has dilution impacts on their shareholders.
Yeah. I mean, if you
So
think
it's
about
very
that,
promising in that regard.
yeah, I mean, if they were able to raise, if this thing moved up and they were able to, really kind of come out ahead of it, like this, the ironic thing is they were getting shorted into oblivion, and this may be actually the thing that makes them go over the edge and like actually
Yeah.
make it as a company, because if they did that, they'd actually have enough cash where they might be just off the bat of $10 to $15 stock. And so if you bought it too, you're like, oh, wait a second. Like now this thing's like book value is like $15, and you might be trading at $20 a share soon. And it's like that was ironic that this company was going to get put under, and now they're actually in a great spot.
Yeah. It's ironic. Yeah. So, and I feel good to be a part of that at the end of the day.
Yeah, I mean,
That,
like
we're,
you saw the greed. Like you can see off that chart
oh, yeah.
shorts should have started covering back down when it got, in my opinion, below 3. That's when you should have been like, okay, we made our money.
Hmm.
We need to start closing out these positions because it had gotten pretty big down there. But
Yeah,
they just kept going, and I'm like, that's when I got pissed, and I was like, there's something wrong with this. Like, you guys are
it's
not
so
pushing under
wrong.
current assets. Now you're gonna get to the point where people are like, we're gonna hit 142. I'm like, 142 is like 89 million. Like their inventory is 89 million. Like, not including
Yeah,
cash and some other like it just fundamentally it made no sense, and that's when I was like, these guys just got greedy as hell, and they're gonna end up getting their bottom smacked.
yeah. I hope they do. But I mean, every week that goes by, it's 1 week closer to getting those cost of borrows up to where it really starts to hurt the shorts. And I think every week that goes on till then, it's how much pressure gets put on that gamma ramp, and I think we see gamma induce mini pumps, Tuesday, Wednesday, Thursday of each week, a little bit of consolidation on Fridays, maybe a little bit on Monday morning, and hopefully the cycle continues to wash, rinse, repeat itself until we wake up and we see one massive green candle where everybody's happy, and hopefully many people's lives are changed for the better, by having conviction at where they're at right now.
Yeah, when
That's the hope.
I was gonna say when I played GME, the one thing that I really thought about was, the one thing that's interesting is when retail understands how all this works, it's so much better for them because they trade it better. Because, like, for example, there were a lot of people like one of my best friends, and I won't call him out too much, but like he bought GameStop. I had him buy some GameStop when it was in the teens, and he sold at
Hmm.
30, and he was like, "Man, I did awesome." And I was like, "You did what?" And he was like, "Yeah, I sold." And I'm like,
Yeah.
"What? Why? I told you this is a squeeze plate." And he's like, "Man, I made money. He's like, "That's what I did." Well, then it runs up to $500, and he's like, "Why did I sell at 30?" And they ended up buying in again at like 200, and then like 400, and then obviously lost money. And I'm like, "You traded that just like the like worst possible trader. Like you basically
Yeah.
bought when the RSI was like 90, and then you sold when like it just." But when I talked to him about it, I'm like, dude, you sell on the way down, not on the way up. Like,
Yeah.
but I think,
Well,
but I think a lot of retailers don't realize that because it's like you can always sell on the downside. You can't once you are out, you're out. And so
yeah, I guess that's kind of the thing though. It's kind of like knowing when does that downside really start
start
though is the
exactly.
thing. And
And when you start seeing a breakdown in technicals, and I think that's one thing at least that our Discord has done a really good job of being like very transparent, honest with at least like the way we view things. Like if something's bad, then we'll talk about it. Like I'm not going to sit there and like, you know, I know there are subs in there that basically removed, anything that was bad about the stock. If there was something that made people question it, they would remove it. And I'll be honest, even when I was in this support stuff, there were mods that were removing stuff, and I removed some stuff because I thought it was fun. And like in the long run, like I didn't allow people to have honest conversations, and that was the biggest mistake I ever made in my life. And so I decided that I would never do that again. So if there's something going on with it, let's talk about it, let's discuss it, and then if it's not great, then it's not great, and we just all have to deal with that.
yeah,
And so
exactly.
I think that's a better way of trading, and it's a better way to run things as far as like if you can't be honest with yourself on a stock, then you should be in that stock. Like I've been in Aterian long enough where I've seen good, I've seen bad. Like like nobody likes dilution, but they did it in a private placement, which actually was one of the catalysts of this thing because all of a sudden the free float when that was all locked up, it jumped from 22% to like 35%. That was a
Mhm.
huge thing for retail to see because that sparked their interest again. They were like, "Oh wait, why is this stock all of a sudden 35% shorted?" That was a key statistic for retail to look at. I mean, it wasn't like the catalyst, but I'm just saying it was something that retail noticed. Like, "Oh wait, why is this now 35% shorted?"
Yeah, where did they get those extra 13% float shares to short into basically what we're holding right now?
Exactly. Like all
Yeah.
these things don't line up, and that's where I just want to like kind of like there's stuff going on underneath the surface here. Like Tyrion looks like a duck on the water, like but underneath those legs are churning, and there's stuff going on that people are like It's just, I told you, like when I read off that statistic, like there's been 760.55 million shares in volume since we hit 100% utilization.
Mhm.
Like there's only like the float was already locked up. Like where are these coming from? That's a lot of
Yeah,
volume on a stock that has no shares.
yeah,
Like that's an
yeah,
insane statistic. Like, and then 233.46 million shares short volume in 8 days on a stock that doesn't have any shares available. So
yeah. It's incredible. It's
but
what
a
a time
lot,
to be
but
alive,
that's where I wanted
honestly.
to talk to you because I know you know the options chain so well. You can hide a lot of stuff in the options chains,
Yeah,
and you can hide
yeah, and
some of that volume. Just tie it up and kick it down the road.
yeah, exactly. And I think it was as clear as day, like from this past Friday, where the stock had what, like over 100 million volume, like traded, just a ton, like on Friday still, but yeah, the vast majority of the transactions came within the last 2 hours. And I think most people may not know, but like I know, like I do almost exclusively Robinhood for my options trading because of their zero commission structure, and it's easy to get in and get out. Like I love it. That's just my personal preference for that. But a lot of Robinhood and a few others that I'm aware of within the last 2 hours on especially heading into an option expiration, like you're done trading options. They're either going to close it for you if you don't have the funds, or they're going to exercise it for you on your behalf. But that last hour, it's like you have up until 15 or 101 minutes, or excuse me, 61 minutes, like before the close of the trading day on Friday, to get out of your option positions. So when you see a bunch of trades come in, within the last, especially the last hour, but even like leading up into that, and
Yeah.
you can see like, well, why are people closing their positions? Like why are they just buying these calls outright? And then you put two and two together, and you see in the DD that I sent you earlier, where it's like, oh, they sold 900 of these calls short. 900 calls, multiplied by 100 for the number of shares. That's 90,000 shares.
Yeah.
90,000 shares at $5 a share is $450,000. Where are they going to come up with $450,000 worth of shares? If nobody's selling them. So that's where when you break down the math, you look at the open interest, you see the volume, and then you make an inference based on that. Like, I think it's a pretty clear cut calculation. I think any retailer that uses unusual whales, or even just goes to Yahoo Finance, looks at the open interest and gets an idea of what's going to happen. Like they'll know pretty quickly that if an option short is going to be screwed, going into that expiration. But it's helpful to have something like Unusual Whales, for example, or Sweetcast, whatever your favorite option tool is. I like Unusual Whales because I'm just really familiar with it, and it's less than $40 a month to use here.
Yeah.
But you can see these transactions come in, and you can see the individual breakdowns, like I did in my DD here, like where if you look at you click on it, and you can see like what positions were bundled together here, and you see, for example, let's go to this one here. Someone's buying a bunch of $4 calls, within 62 minutes of expiration, and then they're selling a bunch of $5 calls. So for each of those 1,418 options that were transacted here, they had to take about. That's a huge loss. That's close to $80,000. Just in premium there, and to their defense, it makes the most sense because like if you're closing it out right before expiration, you've basically exhausted all of the theta value on the stock. So the only thing that you're really trading at that point is any little bit of volatility left. Like, in this case, the underlying was $5.48, went down 28 cents later, but that would have also decreased the value to which they could short next week's calls, for example. So, but still though, that's 141,000 shares that they would have been short, that would have been agreeable. They would have had to pay, close to $600,000 for 141,000 ATER shares, and then they would have had to sell them for $5 each. So that's a $100,000 loss approximately.
Yeah.
That's a lot of money. And
And
Know,
that
if you're
adds up
taking
when you
notes
do
on
all
this,
each one of those legs, right? Like if they're taking those losses across the board.
exactly. Yeah, I think the just seeing them broken up in this way, there's 158, 456. I think they had to go to a few different dealers here in order to get the entire deal closed here. But yeah, you're more or less exactly right here. Like they bought it, bought these April 14th, to close the position so that they're not obligated to or get assigned those shares and then have to resell them. So they've just more or less they've rolled up their short position here. So now they have, oh, they're going to be in trouble next week if this stays above $5, let alone $6 or $7, because that's a lot of shares
Yeah.
that are naked and kind of, as you said, hidden in the option chain here.
Yeah, and I
And
mean,
this is how you find it. Look at unusual whales, click on the transactions, heading into expiration here, and see who's buying calls that are otherwise expiring in the money. That's how you know it's a naked call.
yep. And not only that, but then if you combine that with the amount of FTDs that are probably piling up right now from the brokers, from each one of them, you're sitting
Mm-hmm.
there and you're having to deal with that. Like that's like this is stuff on top of stuff. So they're hiding stuff in the options chains to basically kick the can down the road, hoping that retail will get out of this. But at the same time, the FTDs are piling up. We're reg show right now, and the pressure's on. I mean, because once this starts rolling, like if retail keeps buying in, there's nowhere to go but up at this point. Like unless they literally commit like fraud in the open market, which at this point the SEC's got to be watching.
Yeah, exactly. And with those FTDs, it's like, if they're, let's say you are the market maker and, you have to come up with, or if you're a smaller like institution, that's trying to make liquidity for the market and therefore, give your shares but not actually locate a share until 35 days later.
Yep.
If, say someone bought shares at $3 thinking, oh, it's going to be back below $3, therefore I can make money as if you paid me $3, but I only have to buy it when it's $2. That's why I think the FTD mechanism exists, just to basically try to get it at a cheaper price down the road. So, if all these $3 shares come due $35 or 35 days later, and they realize, well, this could be an issue here. So one way that they would be able to hide it in the options chain here is that when they realize it's, things could be really, really bad here, they buy a bunch of deep in the money calls, that precisely line up with T plus 35, so that instead of taking a chance that ATER might be $10 or $15 or $20, they might buy an in the money option, say today. Buy it for $2. The premium would be like $400 per contract, but at least they have a way to collect those shares and then resolve the FTD situation. But at that point, by kicking the can, they're still taking a pretty incredible loss.
Yeah.
And they still have to buy those shares on the open market in order to fulfill the contractual obligations. So it's just a way to get them cheaper. It puts the onus ultimately on the market maker instead of
Correct.
whoever it is here. And
the market maker's like, you guys are about to screw me, so.
So I remember, in one of your DDs, this is really a long time ago, but whenever ATER was doing, about 4 to 6 million in volume, like right before, January, February, March here, where we really hit low volume, we were, $4 or $5, share or so, and they decided to open up weekly options on this.
Yep, and I said that was going to be a really big problem because they're basically trying to control this.
Yeah, so it's easy to control when there's low volume. It's like all you have to do is make one short sale, and then suddenly you can be at max pain for the week. Max pain, for anybody that doesn't know, is like the price at which the underlying stock has to be in order to put the most number of combined call and put options out of the money. So meaning that they collect the most profit off of the premiums, because then they don't have to like buy or sell the shares. Like, there's still a little bit of arbitrage that's lost, when they, try to find enough shares to fill the contracts or so. So by figuring out what premium leads to the most profit, that's the max paid. And it's always somewhere between zero and whatever the top of the chain is. So in this particular case, it's no longer in the market maker's best interest to do that anymore because, well, now they have this FTD situation piling up and, there's way too many short positions open right now. So it's like if the price just keeps going up and up and up, they're going to have to keep buying it. They're going to have to keep moving that max pain upwards in order to still maximize their profits. So it's not just the market maker, I guess, that's throwing a little bit of uncertainty here too. But whoever decided that they want ATER to go bankrupt here, like they're
in trouble.
they're in real trouble, and they the weekly options are, was kind of one of those things. It's like pay me now or pay me later, where you know they decided, yeah, we're going to keep controlling and controlling and controlling the price, and then at some point when the volume just dries up, well, you're not going to make that much money. Like there was a period of time, I think, where there were only like a couple hundred, I think, options open at a given strike price, and if any sizable position were puts or short calls, like that's premium that's coming out of the market makers and into whoever's holding the shares, assuming it's not a naked call, of course. But now we've clearly seen here that there's so many naked call positions that were opened up, and they figured, okay, well, I can just sell naked calls to retail, and I can short it at the same time, and I can do this once a week, ring the register. They can't do that anymore, because now every week that goes by, every dollar that this goes up, that's another $100 times number of contracts that they're going to be in the hole until this is resolved. So either they get margin called, they get called out of their short position, or all hell breaks loose. So that's why I think we're waiting, and my optimism is very high.
Yeah, and just so anyone that doesn't know, market mechanics wise, the reason why the price has to go up is because essentially you have to find sellers. So if you can't find sellers down here at the $5-6 range, they have to move the price up until they find eventually enough sellers to start actually killing off some of these FTDs and starting getting shares back. Because right now they're selling essentially more shares than exist. And until they resolve that, and the only way you can do that is if the price gets high enough that literally people are willing to unload their thousands of shares. Like, I just wanted to put that out there. That's why, mechanic-wise, you almost have to let the price rise to reset all these FTDs and get these things out and get these shares back under control, because the longer they sit here and just sell it to us, they're running into huge problems soon.
Yep. Exactly. So, yeah, I think this is one case where having weekly options actually helps retail out more than it hurts it. And I think with Aterian specific investors, especially the ones that follow like the ATER stock Reddit sub, and of course in the Discord as well, like they're pretty well aware of what they need to do if they decide to play options. I mean, options are obviously not for everybody. There's so many little things that go into how options are priced and how they function differently from the underlying share price, of course. But the combination of just buying and holding the shares and keeping enough of the option chain locked up, or keeping enough of the flow locked up and in the money options, like that's where you push the price up. Because short position could they could try to find more shares, try to beat the price down a little bit. As long as retail keeps buying it up and they don't force these options out of the money, well, market makers, they're going to have to buy it. They're going to delta hedge according to their models. They're not going to lose money on that. So the only people, I think, at this point, like we're 2 weeks into this, the only people I think that are losing money right now are indeed these short positions. It's not market makers right now, at least the ones that are on our sides anyways. And pretty confident that, as long as they don't decide to do a mass exodus of unloading all of the volume that they've held in the money options, we'll be in good shape for that. But, last week would have been the week to do that, because it was a quarterly option expiration. There were 15% of that float was locked up. If they would have sold 15% of the float, like, with the liquidity that they had, that would have created a negative gamma cascade effect that clearly we would have all seen. And, there's a little bit less this week, so it's not going to move it quite as much, but it's going to move it enough to where, instead of seeing, 20 to 30 cents per hour price moves, it's going to start pushing 40, 50, 60. I think, the longer that we stay above $5 a share, just from, how the Fibonacci sequencing, is working and how it's expanding upwards, in between ranges, not to mention, clearing levels, to get back to old trading ranges and all that. So again, in our favor.
Yeah. I was going to say, I'm just seeing that some stuff's popping up on YouTube so if somebody asked, how likely would it be for the hedge funds to be margin called? Wouldn't that be like zero chance because this is a low cap stock?
I would say it's going to be near zero. I give it, yeah, maybe a 1 to 2% chance. I think it's going to take, I think, in order for a margin call to happen on a stock like Aterian, you're probably going to see that in GameStop and AMC and any other heavily shorted, algorithmically traded, um, stock, I think, as well. So I think if there's a margin call that drives an Aterian short squeeze, we're probably going to see it across the market.
Yeah.
Yeah,
So
because
it would be them losing control on, for example, like a GameStop, and then their smaller shorts would also come out, which is also why some of the, if you notice, like when GameStop ran, everything ran.
mm-hmm.
Like AMC ran, COS ran, BBBY, all those ran at the same exact time. Even like
Yeah,
Nokia and a couple other ones that I remember, which were like
yeah,
interesting.
exactly. Yeah, so that's
But what I was
yeah, I
going
think
to say is, you don't need to be margin called to actually, and for this to run. And I think in this case, at least from my perspective, this may get to the point where the entire float's locked up in the option chains, like in the money, and they don't have any choice. And that's going to be basically like the SPRT, like the spurt, like that's essentially what happened there. Was eventually these option chains couldn't hold the, because it's such a low float, compared to so many others, that you could literally have the 25 million shares locked up just in the money calls, or bullish puts,
yeah,
whatever.
exactly, and yeah, that'll make the market makers will be forced to just buy what's available, and then at that point, that's where they have to bid up the prices, and then have people like us who are willing to sell to them. So it's going to be less of, I think, a short squeeze and more of a
Gamble.
the market maker needs to cover shares that are in the money, and because more and more retail is accumulating these, not just shorts, the short shares and obviously the liquid shares that are being held. So it just becomes a matter of at what point did most of these short positions enter, which we know is probably, most are below 6 to 8, and then even more, I think there's probably a giant volume, that are in that $3 to $4 range, that we're really trying to push this to like $1 to $2.
Yeah.
At what point does the cost to borrow of holding those shares exceed the total value of the sale that they made? Because at that point, if they lose 100% just on cost to borrow fees, then they've completely lost it.
At that point, it's not worth holding the position anymore, because it's like,
So they have to. That's when they close the position. Ultimately, is
they'll go net long and just run this up.
Yeah, exactly. So they have to switch it up, and then anyone who does long position trading, like short selling is kind of the exact opposite. It's like the people that make the most money on a long trade, they sell at the top, and then everybody else kind of sells on the way down. So whoever's first to sell at the top is obviously going to be the most profitable. Same concept works for a short seller. If you short sold at the top, and then you bought back when it gets to the bottom, you've made the most amount of money, and then everyone that's behind you is, they still make money, but they make a little bit less money.
Yeah.
So if you're, starting to cover short position, if you just get out at cost to borrow, well, you return the short shares to the lender, you create a ton of buying pressure. Now the next short seller will need to close their position. Those cost to borrow fees are going to go up, because now the person holding the short shares, as far as I understand it, they have new shares that they can lend out. They can charge a higher cost to borrow fee, and then they can lend it out to somebody else. And then at that point, like, the price is just going to get so ridiculously volatile that, I could, for example, take a new short position, say it gets to $30, and 2,000 shares are available to borrow, and I choose, to put that position in at $30. Well, if my cost to borrow clock is reset at 1, I effectively have 10, 20, 30 days or so for it to get back to, like, I don't know, even $25, $20 or whatever, close the position, make a profit. It's the ones that have been holding for such a long period of time, like for weeks and weeks and weeks, expecting this to go bankrupt, while it was, probably less than 10 or 20% cost to borrow fees for ATER. That, like, they could hold on to it forever, basically. 1% is nothing, but 100% or 200% or 300%, like, they only have a couple months at that point before the position is completely, like, lost, where they've lost more than they made the sale on.
Yeah, and that point.
So that's where those unlimited losses come.
Yeah.
Go ahead, sorry.
No, I was just going to say, at that point, it just doesn't make sense to hold that position. That's kind of what I see happening more likely than, for example, a margin call in the small cap like this.
Yeah, exactly. So yeah, I think it's plausibly more likely that it's an ongoing, day by day, week by week process where, people that are willing to hold the momentum stays and the cost of RFEs for those existing short positions just gets so exorbitant that they have to close the position before they exceed 100% or more loss on their position.
Yeah. Another question came in that says, "Can you clarify what options players need to do?" Number one, once again, we are not financial advisors. This is not financial advice. This is just retail, just talking in hypotheticals. But obviously, like in the money, do you want to go over kind of like how delta hedging works?
Yeah, delta hedging. So the two most important, I think, Greeks, in the options pricing model that are used to determine the price, there's option delta and there's option gamma. Option delta, basically whatever it is on the contract, like say a delta is equal to zero point 0.8. That means for every one contract that is purchased, a delta of like 0.5 or above usually means it's probably in the money. So, a delta of zero point 0.8, for example, would mean that the market maker, they're contractually obligated to give you 100 shares of the stock if it expires in the money. Delta means, that's how many shares that they hold for the time being. And then the gamma is the rate of change of delta. So that means for every dollar that the stock price goes up, that's how many more shares they need to purchase in order to hedge the position. So if like delta at that point is equal to like 0.15 and or gamma is equal to 0.15 and delta is equal to 0.8. Now the delta is 0.95. So they've hedged basically the entire position at 95 shares on the contract. So by expiration, they'll need to find 5 more shares and then they've fulfilled their contractual obligation. So that's more or less how delta hedging works. So as the price goes up, the gamma will slightly decrease, but that increases the gamma. So that means they have more of the option delta available to deliver to the contract holder, if that makes, hopefully, it's a complicated subject, but that's more or less like how it works. But, and with that said, there's kind of two ways that it works. When somebody buys an in the money call option, it's effectively, it's very similar to basically doing like a layaway for 100 shares. So like, here, give me just a second here. I'm going to go to my app here. I'm going to look to next week's option chain. Give me just a second.
No, you're fine.
Yeah. Okay, so let's go to April 29th. I'm going to look at a $4 call. So right now, a $4 call option has a bid ask of $1.68 to $1.76. If I were to go to Aterian at market open, I would need about $564 in order to purchase 100 shares. For some people, that's a lot of capital. So a call option, in this case, it gives you the same amount of exposure to those 100 shares, but at a lot less of a cost. So in this case, the bid ask is between $168 and $176. So let's say I pay $170 for a $4 call option. So that means I've paid $170 of that upfront, kind of like in a layaway where I put a little bit of the money down. I'm going to come back with the rest of it later. And in this particular case, if the strike price is $4, that means I would get 100 shares at $4 per share. So that's $400 for those 100 shares, plus I've already paid the premium of $170, meaning that the total cost basis for my position is now $570. But that'll only be deliverable, I think, 2 weeks from now. So it's an advantage, like if you don't quite have the amount of premium, or like you really do want the shares, you really think they're going to be in the money, at this point. So you pay a little bit of premium up front and you're effectively locked that price, with the strike price plus the premium. So, and in this particular option case, the delta is like 0.85. So that means it's more than likely going to expire in the money. The market maker is going to buy 85 of those shares on your behalf. In exchange, you get the contract. The contract premium kind of holds its value, until the expiration date, of course. And, it's kind of a win-win. Someone else buys 100 shares. It increases the buying pressure on the float because they have to go out and buy the shares, and you have the contract to say, well, I want my shares on the 29th if I choose to hold the contract to that amount of period or through that period. So that's how the delta hedging works for an in-the-money call option now.
And I was going to say,
if I make, go ahead.
I just want to interject real quick. So the one thing that's interesting though is because most retail trades never actually hit the lit exchange. I believe it's like 90 to 95% of all retail trades never actually hit the actual lit market. So for example, if you're buying Aterian common shares, most of the time your shares are never going to actually make it to the they'll be washed out in a dark pool or in a off over the counter trade. So one thing this is actually doing when you're buying in the money, like deep in the money, like he was just saying, like a $4 call, is you're making the market maker buy shares for you on the lit exchange, essentially. Not saying this is the financial advice, but I'm just saying like that's the concept that's behind this. Is if you actually want to buy these in the money calls, it's causing buying pressure, which if you were just buying regular shares, they were pushing off market.
Yeah, exactly. Excuse me. Yeah, so so that's more or less how that works there too for an in the money call option. Now, the other one that is just as important, for in addition for obviously organic buying pressure of the underlying stock to continue, you need a fair amount of at the money and slightly out the money call option buying in order for that to continue. That's the whole point of why it's called gamma squeezes, is because gamma, again, that changes, the rate of change of delta, as the strike price or the underlying stock price approaches the strike price. That's where gamma becomes like the most. So, which means like if gamma, for example, for a $6 call, right now for 529, like it's all the way up to 0.14 for a $6 call. So that means market makers don't need to buy 53 shares of Aterian in order to hedge the position, but like if it gets up to another dollar, so say like it goes from 560 to 660, they have to buy another 14 shares, and they have to hedge all of those contracts. So the total amount of delta that's been hedged goes up from 53 total shares per contract up to 67 shares per contract. So now you've effectively flushed even more liquidity out of the trading pool into the market maker's hands so that they can hold that for your in the money call options there, or out of the money that are now in the money, in the case of the $6 call option example here. So with that said, of course, like those higher out the monies, like I think they get tempting for retail because they're a lot cheaper to enter. The premium overall is much lower, and there's a chance to make, quite frankly, a lot of money on them. If it runs from, say, $6 to $7 or $8 very, very suddenly, because now a lot of that delta has been hedged, and it's going to go up, 1-to-1 for every penny that it goes up. It'll go up another, $1 per contract, roughly speaking. So it's, that's quite good. That's what I think tempts a lot of retail, thinking like, oh, I'm going to YOLO calls, I'm going to make a ton of money. But the reality is like those premiums are so high, and you really have to count on the stock actually going up. So that's why it's important to, from a risk management perspective, really consider, the in the money versus at the money there, because like if Aterian were to drop, for example, $1, like because that gamma is so high, it works in the opposite direction just as it does in the upward direction as well, where those contracts will lose a lot of value very quickly. And, at least by having in the money calls, like you're still getting that 1-to-1, so you're playing it more or less as if you have 100 shares as opposed to the option. So that's where the risk enters this with the out the money options.
Yeah, and I was just saying that's why when you buy your options is super important. Like if you're buying your options at, for example, the peaks of these green bars, you're getting the highest IV, you're getting basically the worst price. Like if you're going long and you're buying calls, you don't want to be buying it at the very peaks of these things. You want to be buying it when it's red and it looks bad.
Exactly, yeah. Yeah, exactly. You should never, ever, ever, I mean...
Not financial advice.
You can't offer financial advice, but it's I would go as far as to say, like, the odds are very, very stacked against you if you're buying, like, on a giant green candle and you're expecting, to make quick money, because, like, on those volume spikes, like, at that point, like the price is getting bid up so quickly, the underlying stock price is moving up so quickly that suddenly people want those contracts, like they're trying to buy and buy and buy and buy. That's what causes the IV to go up. It basically, like, it's an artificial upbids of the, the pricing. So people get caught in those high IV traps. That's what I like to call them. And again, yeah, kind of going back to when we started talking in the first hour here, like the individual levels that I kind of look for here. Just kind of pattern recognition and kind of using that as a proxy for what's potentially going to happen next year. So, like, if we see, 614 and then in the $8 to $10 range, like, if there's a giant green candle there, like, you're probably going to get a cheaper, for example, $8, $9, $10 call option a lot cheaper if you wait for the retrace, like, as opposed to when it first hits $8, because the IV is just going to be, it's going to get you in at a much higher entry cost. Like, it does not pay to be first if you're late to the party in that particular case, and trying to get something that's in the money there when you could be buying it a little bit later, waiting for it to consolidate. And that's kind of a good point, actually, that you bring up about the implied volatility, because volatility is literally computed based on the price action for set periods of time or so. So, like, when, like, up until a couple weeks ago, where we were range bound between $2 and $3, the IV was so low on a lot of the options that you could get in for, you could buy or sell calls on your shares for, $3-5 per contract or so. And in the money ones would obviously be weighted to whatever dollar amount was already in the money, of course. So, but anything out the money was very, very cheap because there's just no volatility on the price. It was moving, 10, 20, 30 cents in a given day or so. So, but on recent days where it's moving 50 cents, 60 cents, 80 cents a day, $1 a day, that's going to spike the IV up quite a bit or so. So obviously the best time to get in is whenever there's consolidation periods in the stock price. And frankly, if there's a consolidation period, like, I always think it's a good idea to, if you're going to start loading up options, load them out a little bit further in time, because if it needs a couple of days to consolidate, like the theta drip off the contract value it could add up if it needs time to consolidate. But if it doesn't, but once it does that, though, like, the IV is going to be nice and small, it'll be lower. So then if you see, random price spikes, like, let's say it's, you buy a $7 option when it's like $5.50, and then it just, consolidates, it could be worth, for next month's chain, it could be worth anywhere between $75 to $80 a contract. But if it suddenly spikes $1 and it gets rejected and it comes back to $5.50, that contract will actually be worth a little bit more money because it had that price action spike. So where it was moving, if it was range bound for 20 to 30 cents and suddenly moved $1, you've increased your IV by a set number of points over that period of time, and you can still actually exit somewhat profitably just on the IV alone. So that's kind of a little tip again. You only, that's how it's mathematics. I can't say it's financial advice, but from a pricing standpoint, that's exactly what a Black-Scholes output model would give you in terms of, how the price can change on an IV spike without actually changing the underlying stock price.
I was going to say, you built your own, did you not?
I do, yes. And I've shared a little bit of that data, to the Discord channel, just kind of figuring out. I use it mostly to figure out, like, what is the fair value of this, the underlying option price before I actually go in and buy, especially if it's something beyond, like, 1 to 2 weeks or so where, I don't want to overpay, obviously. Like, I want something that's, going to give me fair value but not destroy me, like if the IV decides to go down. But yes, I do use my own version.
Nice. And I was going to say, the one thing I wanted to do, just to call out, if anyone's able to, just hit the subscribe button. I just noticed that we're I think I don't know, 16 people away from getting 1,000. So that'd be cool if you could just hit the subscribe button now. Just throwing it out there. If you would like it. I was going to say, I really appreciate you coming out and talking about this stuff, because I mean, obviously, like, I'm a nerd. I like talking about stocks and I'm about as huge of a nerd as you'll find anywhere else. So like, to me, I could do this all night and be like,
it's definitely fun to talk about for sure. But I guess I have like maybe a couple minutes left or so before I need to get some stuff ready for my work tomorrow morning, and obviously I want to be, get that done in time so that I can hop on the Discord, for hopefully an hour or two before I really get busy on Monday.
Yeah.
So,
So all right, let's just go over then like the last part. So people were just asking real quick about the let's see. So many people want to know about these out of the money contracts. They're just lotto tickets. Yeah, essentially, right?
they're lotto tickets if you buy them for this week's expiration or for next week's expiration. If they're out of the money, yes, they're what you would call a lotto ticket.
Because essentially that's what those, a lot of people, that's what retail typically buys. And that's what I personally, I don't trade that way. I don't like out of the money. I much rather would be in the money and then just, go up and, at a certain point you almost act like you have shares at that point because, they're so deep in the money, that's just how they respond. But,
Exactly.
people get burned and people get burned badly doing, like I know we had a guy in here that I think was betting on the 750s and it didn't come and he lost a huge chunk of money. And I think we had another mod on Aterian that had bet on, I think they were, and I told everyone back in August and September and November, I'm like, listen, don't buy out of the money calls. And they're like, well, all these things are happening. I'm like, no, like this market maker is not going to let those happen. Like I promise you guys. And people didn't believe me back then, but I think finally they're starting to realize that like these market makers win most of the time. Like they hit max pain almost all the time on low volume. And so unless you get volume that's sustained, we've beat Max Payne the last 2 weeks, which is insane because we lost Max Payne pretty much every single time except for 2 times before that. Like, I'm just not used to seeing market makers actually not being able to pin it down Max Payne.
Yeah, it is. Yeah, fairly. Yeah, significant, I guess, but you could tell.
They tried on Friday.
They did, yeah. Well, I don't know. I may disagree with you on this one. I'm not sure that they tried so much as, people. There's just a lot of unwinding at the end of the day. Probably a little bit of profit taking, but
Sure.
If they really wanted to pin this to Max Payne, like they would have found a way by now. I'm quite certain of that.
I don't know if they can.
Yeah, that's exactly it. Like too much of the foot. Like it's been, we have 2 weeks of in the money's expiring. And the short interest is already through the roof. So unless people start closing their short positions, they're just not going to have enough to really, unload to retail, to where they can actually produce a sell off. Because, you can't short more than 100%, right? Hypothetically speaking, anyways.
Yeah, and can you, so a 750 for this April 22nd expiry, like, is that a lotto ticket? I mean, at this point, kind of at this point, but I mean, if we have a swing and an Ivy spike, that's when I would exit personally. Like, that's how I'm going to play it.
Yeah.
Like I expect us to have a nice big Ivy spike at one point this week, and that's when I'm planning on like I've got some 750 calls, and that's when I'm planning on exiting those.
Yeah, well, I think I told some people I sold some $8 calls I think on my shares just because of the whole like weekend theta decay.
Yeah,
and I think the way that I like to play weekly calls is I like to sell like as far out the money, well, reasonably out the money, where I'm going to maximize profit based on the amount of theta decay that'll happen on the contract. So, this 3-day weekend, like the second the market opens, like I'll be able to close those calls for a pretty nice profit.
Yeah.
I think, at least, for somewhere between 40 and 60. And that depends, of course, like, does it gap up? Like I computed, I think it could gap up to 660 or 670. And like, it would, at worst, I would break even. So that's usually a good, well, again, not financial advice, but usually a good, it's a better idea because, like, if there's a spike up and then there's a retrace, any weekly option, it's going to lose a ton of its value very quickly. So, So like every stock that I've ever held, like I've always done that. I use that as like my means of passive income. And then depending on the circumstance, like in this particular case where, I want to scalp options. Like I'll be looking for like the May 20th. So like anywhere between 30 to 45 days out, like that's usually your best risk to reward where you're not really seeing the negative effects of theta decay, but they're a little less prone to IV spikes, I guess, just because like the closer you get to the expiration is where they really ramp up the IV. So any IV spike, like that's where they bait retail and that's how they more or less ring the register with their pocketbooks. Is like people are like, oh, it's running up. These are the cheapies, and they'll buy 10, 20, 50 of these at $50. They'll throw $250 at that. They don't close them immediately, and then the second there's a retrace, now it's down 10, 20, 30% of their initial investment, and they can't get that back.
Yeah, so on mine, like, I'm expecting a IV spike, so I'm just going to be out on those. Like, I'm not looking for it to actually run in the money for 7. I just want to get those ones out on an IV spike, and then I'll roll those into probably the next week for a swing play.
Yeah, that's perfectly good. I mean, even myself, like, if I'm going to do what I would call auto ticket, like if April 22nd is the next expiration, like April 29th is probably the safest I would be. Like, that's just my personal comfort level to everybody. It's everybody else. It's kind of their own personal preference, I guess. But that's not to say, I guess one thing I'll just kind of dispel a little bit is that you do need a certain amount of people willing to buy and hold, like, the weekly options. Because, like, for the Gamma will be the highest, the closest to the option expiration. There's an inflated amount of Gamma that just gets added onto the option chain, from the 5 to the 650 range. That's where you get a lot of extra market maker buying, and that's ultimately what causes it. But the reason it's so risky is because in order for that to happen, you're kind of taking a leap of faith that a bunch of other people are going to take that leap of faith with you. If, like, you're the only one diving off the cliff, you're likely to get murdered. Whereas if you jump with a bunch of people, you're more likely to have somebody that has a parachute that can get you a soft landing and stick it and.
But yeah, I was going to say, I mean, it's going to be interesting because I think the options activity is going to pick up this week. Because I think retail is starting to get interested again. Like, there's going to be, like, there's people that were texting me and asking me, hey, have you ever heard of this AT? Because they know I deal with stocks, and they were like, have you heard of this ATER stock? And I'm like, oh boy.
Yeah.
Because they don't know who I am, because obviously I'm anonymous. So, like, they're asking me, like, but, like, these are people that, like, they're not traders. Like, they're, like, just friends of mine, and they ask me about hot stock tickers because they know I like this stuff, but they don't know who I am on Reddit. Like,
yeah.
But, like, they're starting to ask me, and that's when I start going, like, this is when GameStop happened. Same thing. Like, people are like, why is GameStop going up? And they would ask me this, and I'm like, oh man, how much time do you have?
Yeah.
But I mean, like, people are starting. I mean, it's the number one stock on Reddit right now, and it's being talked about. And I think even some of, like, the older, like, GameStop people are starting to look at Aterian and go, like, this isn't the same. Like, they're used to seeing everything, and trust me, I'm one of them. It's a bit of elitist when I first started with it, because I was like, all these other plays are silly, and down the line, I've realized that they all kind of have their own unique thing because of the float size and their own, like, there are more AMC apes than there are GameStop apes, and that's also because of the price of the stock at the time. And they just figured 1 + 1 is 2, and it wasn't exactly that, but I mean, eventually they got their run because it went from what was it, like, $15 all the way up to 70, so they had a nice run too. And so, like, it's that sort of thing that I think I'm starting to hear buzz about this stock, and that's why I'm pretty confident that, like, I think we just keep taking these steps up until eventually it gets to the point where they're not profitable in these trades, and they're just going to say, it's not worth it anymore. Let this thing run. They'll buy calls on the other side, make a bunch of money, close out their positions, and then they'll probably try to reshort it again.
Yeah, I mean, that's the thing. Yeah, as soon as the short covering does happen, like, there will come a point where it goes from 41% utilization to 10 to 20% utilization, maybe less than that or so. That means there's going to be a lot of new shares to be shorted. So, of course, wherever there's top, and the second that we see the short interest just kind of deplete, that should be kind of our, blaring, red and black flags to say, this is likely to come down at this point, because that's just how it works, because in the same way that we buy, long stock at, $2 to $4 a share, shorts are going to be looking to get in, probably anywhere between 20, 25. Who knows how high it squeezes, but
sure.
That's going to be their entry point. And for as long as the cost to borrow remains reasonably low, or they know that it's going to go down within a 10 to 20 day period, that's when they become profitable. And that's how you compute, not only where do they short it, but will it give them enough time, to where the decrease in price offsets the cost of borrow fees?
Yeah, and somebody just wrote, Zip Trader just put out a video half an hour ago. It's already got 5,000 views. Yeah, I'm pretty sure retail's jacked.
Yeah. I'm a little worried I might have to close it. My covered calls at a slight premium tomorrow, but that'll be quite all right though, because
you've net long.
I'm net long, and I'm quite good. Yeah, most of my position was bought in the mid threes to low fours, roughly speaking, and then everybody that's been on the Discord knows that I've been swinging the various strikes and options in and out like repeatedly. So
yeah,
not going to be at much of a loss. Just as I like to say that, like I like to use weekend covered calls as a quote unquote payday loan because I like to do things. I like to golf. I like Panda Express. I like to
there you
go fishing, hiking. Do pretty typical Oklahoma things here. So. And do science on the side, for my day job, working as a scientist here.
Yeah, and someone just wrote, I'm pretty new to options. I have two $4 calls, expiry 4/22. I bought them early with a 61-cent premium.
So
do you guys
20 roughly?
Yeah. So do you have any suggested things? Should I just exercise them on Friday, or do I wait till Friday?
If you're adding more Aterian at $4 a share, I think if you're just going to wait to exercise them, I just straight up wait till Friday, because at this point, like, they're going to be so deep in the money. It's and I think just from what we talked about this evening, like we saw that, we saw this with, again, SST was a good example a couple weeks ago, Aterian this week, and then even to a lesser degree, like it kind of happened again on this past Friday with ATER as well. So 2 weeks in a row where you see like a late day Friday sell-off that's entirely associated with call option rolling, people closing their long positions, even more people closing their short positions, than that kind of initial like jolt down, because the market makers are hedging those short calls or the short call positions, the naked positions anyways, with, by making a short position so that if those calls run in the money again, they can receive and be delta neutral. So that's exactly what happens in that particular case. So it's, just wait till OPEX, and again, I can't give advice, I guess, but if it were me making that decision, Friday's probably the day that I would be deciding what to do. Like, just wait for the broker to, maybe exercise it like 2 hours before market close. And then, if those are in the money options, obviously, like, that's the most optimal thing to do if you intend to hold through expiration. And anything above that, like, play studiously, try to make some profit, if you're scalping, if you're swing trading options, or, anything without the money or so. But I need to think a little bit about what I'm going to do, at least for the early part of this week. So
just addressing two more things, then we'll get off. One of the people wanted to know about dilution. So right now, the private placement already went through. Ace did a great write-up on that inside of the Discord. But basically what I would say is there's no immediate dilution. It already happened. So all these people that are coming out with these false videos, and they're like, oh, I read the S1 and they're diluting. I'm like, no, it already happened. That's how you go in from a share or a float of like 52 or 53 million to like 62 million. It already happened. And so the rest of the warrants there are going to be not able to be used until September 6th of this year. So the other warrants that we have are at $15.60, I think, and there's like 290 of them, or like 318, depending on which source you're looking at. And then the other ones are at 25, and there's about 5 million up there. But I mean, once again, those other two ones are way. I mean, we're at $5. If you're worried about the ones at 25, we got a ways to run before that. So besides that, there's no other dilution that's there. And then the other one. The other last one was basically someone wanted to know, do we have any ideas where this could be on Friday?
Good question. So, I mean, at this point, as someone who forecasts the weather, like I can probably tell you it's probably more likely to go up than it is to go down before Friday. But I guess the TA, like we kind of did that at the beginning of the video, I think under the assumptions that we have continued volume and it continues to form the patterns that we've shown here, like we know, like I've had this 1 hour chart, I guess, up here for a while here, like we're well above the, the Wyckoff, supply and resistance levels here. So it's basically a free for all at this point. So if it, continues to make these nice little, it bulls out at a 50% retrace, which I would expect to probably be completed by Monday morning to afternoon. And then as long more people, buy in, people are probably going to want to buy in, between $5 and $5.50 tomorrow, especially new retail, because they've seen that, like, oh, it's already been at $6, it's already been at $6.50. So psychologically, people are going to probably set a lot of their buy orders, I think, to that $5 to $5.50 range. So stochastic RSIs, kind of, it's bottoming out, but it hasn't yet inflected. And we've noted, I think, for the previous 2 periods here, were 1, 2, 3, 4, 5, 6 hours. So it's taken roughly a day or so, for like new buyers to kind of enter in at a price point that they like. And then by Tuesday to Wednesday of each week, even into Thursday, it's just, that's when it starts ripping, and it roughly follows all of these levels, I think, that we've followed here. And I think, this, because we've gone up so much so quickly here, we went from 498 all the way up to 660 or so. People are going to look at it and then, okay, 440, 430, 420, probably not a bad price.
Yep.
That'll give accumulation here. They'll give stochastic RSI a chance to bottom out near 0 to 5. They'll give RSI to cool back to, from about 55 to 58 here down to, right around 50 or so, which is also another good bullish indicator here. As long as it kind of forms, kind of that cup formation, and then
another leg
on the, one more thing I'll show you here, and I'll give you the floor back here, but it also needs to clear the 50-day, or the 200-day simple moving average, which again is like one of the, any shares that are held by hedge funds and institutions, like they're traded by these high-frequency programs, and the 200-day is the one that they look at, and, the second it gets crossed, that's where their sell programs trigger. We've already triggered this twice. We triggered it once on Thursday, once on Friday. So the third time that it's tested again, the program's going to be like, okay, we've tested it 3 times already. Let's flip another trigger back to buy. Or so I think is going to happen anyways. It's a pretty consistent indicator if you study other squeeze stocks, in the same way that it's going up like this or so. So that would actually, that sort of price movement would give it a chance to break its 200-day simple moving average. And because it's been decreasing by a rate of about 5 to 7 cents per day, that'll put it at right around, I think, somewhere between $5.95 and $6. So the second that it clears that, it'll be stuck. It'll be pinned between, it's 161% extension here at about $6.22 and $6. So if we see it making the handle formation between $6.25 and $5.95, that's kind of an indication, at least for me personally, where I'm going to be like, okay, ATER's ready to rip again. Yeah. I see the next level up here at about 814. We know that that's an old supply zone from back in October to November. I think, I'm not going to say, anything above, 10, 20, 25 isn't possible this week, because we've seen stranger things happen, obviously, but I like to focus on what's next, and then I like to see what the price action does for me. So for me, I'm more or less focused on what needs to happen to get to this next $8 to $8.50 level, roughly speaking. The 261 fib on the patterns that we're forming here takes us to about $8.15, and I think that's about what I am personally looking for. And I've outlined, I think, the scenarios, what kind of needs to happen with the price action in order for that to unfold. So again, if there's low volume, not a chance that this happens. But if the momentum continues and there's enough buying pressure, but if we look at the depth charts, going into Monday and Tuesday, and there's a lot of people wanting to buy between 540 and 540, that's exactly, I think, how we get
to the 8.
Or gives us the best chance, I think, of $8. And then $8, I think, from there, that gives us clearance to reach $10, $11, and then once that's reached, then it's
that might be not.
That's where cost of bar probably goes through the roof.
Yep.
And shorts really start to sweat and stay up at night and check under their beds. So, yeah. So that's what I see for this coming week. I'm not one to, again, go for unrealistic price targets here, but, in my case here, I'll say one more thing here, and I'll give it back to you Anon here, but, I like to swing option plays. I see this. It's such a beautiful convergence here. If the scenario unfolds in the way that I think it can, and it gets here. Like I have a position now, but I have enough cash locked up on the sidelines right now where if I see it get to that point here where I know like it'll form the cup, if it goes rounds up from like five to 520 all the way up to the 6 to 620 range, forms the handle between 630 and 590. That's going to be the second
rip.
where I'm like, okay, I see $6.50, $7 calls. Those are likely going to run in the money if we get an explosive move upwards. That's where I'll probably take a little bit more of a gamble, look for like the May 6th and the May 13th options, because I can get them in a little bit cheaper, scalp the premium there, and then the second it clears this, that's where I sell. That's what I would be doing. That's, again, not giving financial advice, just giving advice to myself here to what I will be looking for to do. And then there's going to be a decent amount of money, I think, to be made just even going up there because. And now that we've expanded that zone from 620 to 820, roughly speaking, that's a $1 retracement that can happen here. So if you're retail and you see this going to $8, you're more likely than not going to lose money if you choose to buy options on that first spike here rather than waiting for it to come back down to, the sixes or so and wait to see what pattern it forms after that, assuming it's not a massive sell-off or so. So that's kind of a long-winded explanation of where I see the price targets and also what sort of patterns I'm looking for to kind of get the ball rolling. Again, this is going to evolve over a couple weeks or so, and we're beginning week 3, roughly speaking. So
yeah. So for Friday, they were asking, what do we think for Friday? That would be, I guess, April 22nd. Is that right?
Yeah, good question. So in terms of what they think might happen in terms of a price,
will it be higher than 553? We obviously don't know, but
we don't know. Yeah,
but if volume continues and there continues to be increased, buying pressure, yeah, I would think it would be higher than it is now because we keep taking these legs up.
Yeah, I think the odds are in favor of it finishing above 550 as opposed to below 550. But again, I think I would say to whoever asked that question, I don't know who's asking these questions right now, but just watch the volume. If the volume's low, manage your risk accordingly because that is more likely than not a red flag as opposed to a green flag. And that at that point, I'll be watching that too because if the volume turns off, I don't want to be one of those traders that's like, oh, it was just a low volume day, let's hope. I'll say, I'll cut a loss, I'll take a little bit of profit, and I'll wait for volume to return on again. That's one thing I think that retail, especially ones I've noticed that play AMC, for example, a couple weeks ago, everybody noticed that AMC went from about $12 all the way up to $34. And people made a lot of money on call options, but there were just as many that I know of that they're like, okay, we've cleared all these technical indicators. Any technical trader would, looking at the same ones for AMC here would tell you that, it's clearly in a bullish upward trajectory. There was that bogus trading halt that caused a lot of the momentum to be halted. But at that point, volume just completely shut off. And it's been in this really, really bad falling wedge just kind of since then. This is this is, here's high volume, so anyone that sold on these 2 days made a lot. And then when you see volume just drop off by 50-60% like that, any retail trader should know, just get out. That's, I'm not saying, again, not offering financial advice, but just, this is almost always a warning sign, especially when they're trying to trick you into being they want you to buy up here thinking it's going to go into 40s, 50s, 60s. But if, a stock is held up like this and, the volume just goes, cuts off immediately like this, you're more likely than not going to get into a downtrend like this. So, and the way that you beat that is obviously, you take profit if you can up as high as you can here, of course, and then just wait for the volume to turn back on. It could have been here. If you do it from here to here, you've added, 15% more shares that you can buy if you choose to buy back whenever the volume comes back on. But if it goes down, 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 now it's gone from 34 in this case all the way down to 18. That's 100% more shares that you can buy because, if you close 1,000 shares at $340 and then you buy them back at, 17 each, that's 2,000 shares that you can buy for the same price here. That creates a lot of buying pressure. So you kind of have to get behind the scenes, think a little bit about what triggers people to sell off anyways, and it's these kind of these hope rallies here, like again, obviously what happened here is manipulation. I'm not trying to obviously get around that or justify it per se, but if you look at volume, you look at trajectories, and you use, again, there's so many other indicators that you can use, but usually volume is going to be the one. Every retail trader, can check that on their Robinhood, their volume, or their Weebles, TD Ameritrades, whatever. It's just, you hate to see people, holding and hoping, because you don't know, when this is going to turn around again. I think it will personally, this particular stock, but it's just, to get context for what might happen to Aterian, people need to understand, I think, what happens to other stocks like, GME, AMC, other similar short squeeze stocks. And that's just, in my experience, it's been helpful to me, to help not hold on to something for too long when I could get in at a better price point while still helping the end cause of, getting this to go from, $6, $8, $10, $12 at the end game. So, because I think I've told people in the Discord before, it's like, if you, obviously, keep, if you bought down here, that long position is going to be as good as gold for as long as you need to hold it. But if you're holding options, the way to not lose option money, especially get decimated on premium, is to sell before the algo bots trigger their sell programs. And the combination of indicators and fib levels, that'll give you a clue as to, when you can exit and then re-enter, either buy more shares or reload calls to scalp for another 2 to 3 weeks down the road.
And I was going to say, the one thing I wanted to point out was DZ does a lot of options trading. And so, for example, like the days we had what was it, 145 million on the first day, the 4th, I believe. Is that about right?
Yep, 145.4 million in volume. Yeah.
So, and then the next day was less, right? It was about like half that. Is that about right? And then the next day, though, it was really quiet. Like that was low volume compared to that. But like,
look where it held its strength.
Exactly.
That's the confirmation I was referring to.
Yeah, so I don't want you guys to look at it and be like, oh, we only have like 20 million in volume, and then you sell, and then the next day it spikes up to 200 million volume. You're like, well, you told me to sell on volume. Be like, well, not exactly. Yeah. There's a lot of factors that go into this. So I just also want to say, if you're playing long shares, if you just bought commons and you're holding them, you don't need to just run for the hills if there's a low day. Because I mean, the Aterian traded $1 million or $2 million. That was it for months. So. But what we're talking about is we want to see the increased volume. Like we want to see these levels where we have these nice spikes of like 100 million, even 50 million. Like these are good things. Like the fact that we actually have volume on the stock is nice because like for the longest time, this was a stock that traded on average about 2 million a share or 2 million in volume. Yeah. And now all of a sudden we're getting like days where we're getting like 150, like, like 100 million. Like that's awesome.
Yeah.
That means
that's
stuff's going on.
Indeed. That's a fantastic point, actually, that you make there, because I think what makes this particular one, I think, kind of stand out in the grand scheme here is that, this was a pretty low volume day compared to 2, but people that have followed Aterian for a long time, again, who know that, 2 to 4 million in volume is pretty consistent here. The fact that even on this low volume day, you could use low in air quotes because it was still 16 million in volume, and that was still 4 times the total volume, I think, on any average day before that. So I think that's where it pays, like where the Aterian community, like having a small float, but knowing that most of us, we probably represent a sizable chunk of the float that's been held already, like by ATER here. It's still 4 times what it was. So like it's.
Yeah, we just don't
what you would call, I guess, like a fake out of sorts.
Yeah, we don't want to see 1 to 2 million volume days coming up. That's what we're kind of pointing out. We're not saying that if we get like a 16 million volume day, the play's over. Like, we don't want to see 1 to 2 or even like 3 million. We want to see stuff that's over like 5 to 10 is what I'd say.
Yeah, like 1 to 2 times like this running average here from basically late December through or late March, roughly speaking. So yeah, that's kind of the average that we're referring to. So like kind of knowing like the reference average relative to the typical trading average, especially during the run up here is what I mean to say here. So yeah, but again, it's kind of putting that out there. It's like, again, I I speak from the perspective of like, I want everything to succeed, obviously, of course, but like everybody should know, like especially if any meme stock you've ever played, the number one goal, you're here to make money. Ultimately, you're here to do something good for yourself, for your families, for your hobbies, for people that you love, that you're surrounded by. That's always the end goal, and you got to make, at the end of the day, the best decisions that are good for you and yourself. And like the thing that kind of keeps me around here, like why I spend so much of my free time like studying options, studying price patterns and all that is, seeing people getting, tricked and like, oh, like it's gonna, you buy in at $20 thinking it's gonna go to 30, 40, 50, and then you're stuck holding that for 1 year, 2 years, 3 years, thinking that, oh, when's it gonna squeeze again or so. Like, it's a lot of stocks that happen like that where like, some companies, Aterian thankfully is not one of these types, but there's other ones, like other retail favorites where, they pump the stock up, they dilute it to oblivion, and people just they get forced to walk away, with like 20, 30, 50, 60% losses, even sometimes more. And there's a lot of stocks, frankly, in the market that are like that right now, just with, this mass contraction event that's been going on with, the war, the supply chain issues, higher oil prices, inflation's through the roof or so. And,
yep, risk on.
Yeah. So, it's, you gotta protect your money and your investment. You work really, really hard for this, and I think between you, Anon, and myself, I think we both agree that like, we want people to look out for themselves, first and foremost, make the best decisions for themselves, and we try to help as much as we can, try to help them make better decisions based on what's worked for us in the past.
Yeah.
So,
I mean, the whole point of the Discord was honestly just to group as many, traders together, and we could learn from each other. Like, there's stuff I'm learning from you, and there's stuff I'm sure that I might be teaching you. And, like,
yeah, it works. Yeah, it's a good symbiosis.
Yeah, and so that's kind of the idea behind it, was you just group these, bunch of traders together, and we can all teach and learn from each other, and, there's going to be things that I'm not as great on, and that, the other people might have strengths in, and I can learn from them, and that's great, and that's kind of the whole reason I did it. It was, I just wanted this to be a group of people who have just want to do better for their families, and also not to, get completely tricked by how this all works, because when most people enter the market, they tend to get their asses kicked. It's because you don't know how, you use common sense. You're like, oh, there's a war going on, I should definitely like, so they buy puts, and then next thing you know, like, they don't understand when the stock runs up like 30 points, and they're going, I don't understand, like, there's war going on.
Yeah. Well,
I had a buddy of mine that he was going into the election for the U.S. the presidential election. He was convinced that the entire market was going to fall apart, and I was like, okay, I just told him, I was like, you just realize that, like, if you short this, you can take massive losses. And he was like, nah, he's like, you don't understand, we're gonna have a civil war, like, all this stuff's gonna happen. And like, literally, people stormed the Capitol. Like, there was a lot of the stuff that he said, and they, what they did in November, what was it, October, November? The SPY was falling. He was making a bunch of money, and then right when the elections happened, it gapped up. The SPY gapped up, I think, like 7 straight days in a row, just to burn all those puts, and then it just took off and ran, and he lost his shirt. And I was like,
Jesus,
that's what you get when you try to like logic stuff out with the markets. Like, the markets don't operate like, they're not logical. They basically look at who can I burn this week and how can I make the most money. And they'll eventually go down, and they'll eventually, or go up. It depends on which way you're betting, but like, they're in it to make money that week. And that's kind of what I've learned is, like, if you look at the gaps on the SPY, like, we'll probably go back and fill those at some point. But I mean, I just kind of laughed because I was like, it gapped up like 7 straight days, and I just felt so bad for him because I was like,
yeah, that's unfortunate, but that's where I'll say too. I'm not trying to extend this too much longer here, but like the whole Max Payne argument, like, in addition to looking at Max Payne for your the individual stocks, I always like to look and see what it's going to do for like the SPY and the QQQ, for the upcoming week, because, for example, I'm looking here. Well, that's 418. So, yeah, that would be tomorrow. Yeah,
Yeah.
so that's correct. So, yeah, max pain for, the Monday expiration is 443, and the current price is 437. And I'm not sure what it is in pre-market right now, but yeah, they're gonna try to get this at least a little bit closer here, and then, but even more importantly, I like to look and see like how does it evolve during the week. So max pain goes up to 445, and then max pain goes up to 450.
Because all those puts, they're just gonna burn out those puts, because puts cost more than calls, and they can make a ton of money on them.
Yeah, they can do that just by unwinding that. So all these puts are in the money here, like. That's effectively a put wall here. So anybody that owns, that bought and held the SPY at, say like lower here, and they're trying to get this down or so, they're going to want to either unload these for profit, and then, or they just let them expire like in the money here, and then the market makers have to eat a really, really, really big loss here without letting it run up. So I'll say at least, going into this week, it seems like the market makers have a pretty good incentive to run the price up or so, but nothing's a guarantee though, because I think last week the SPY, I think, closed $5, I think, in the money, like, and a ton of puts were very, very profitable, I think, last week, into last week's operation or option expiration.
We had somebody ask, could the shorts recover in September? I don't know if they can last to September, to be honest with you. Like, I think in the next couple of weeks, it becomes really unprofitable for them to hold their positions if they keep doing this.
Yeah. Well, in September, they would really need Aterian to be like probably below $1 at that point. I mean, the way that you can compute that, the cost to borrow, I think, is like an annualized rate or so. So let's say the cost to borrow is 100%, per year. 100%, if you borrowed the stock at, say, $3, then the cost to borrow fee by the end of the year at 100% return is $3 per share. So the entire position is at 100% loss, I think, by 1 year or so. So if it's 300%, that means that's about 4 months or so before the entire cost to borrow fee, exceeds the total entry price of the underlying stock. So there's a way to compute that, actually. Yeah, you can, look up the cost to borrow, figure out when the short took out its position, and compute, using that cost to borrow fee, like the number of days it could be held before, it goes to zeros. So basically, like, when you're taking it out, you need to figure out, like, what rate of decrease does the stock need to go per day in order to offset the cost to borrow fees. So yeah, there's absolutely no way at these cost to borrow fees that it's going to last through September.
Yeah. I mean, I did the quick math on it. I was like, yeah, there's no way these guys do it.
Yeah. Yeah, so
those Septembers are not going to help them. At this point, they're either just going to have to get retail out, or they're going to be, they're just going to close their positions and go net long the other way just to make back some of the losses they're going to incur.
Yeah, exactly. So, all right.
Yeah, you good?
I think so, yeah. I mean, it could be a lot easier to talk for a while here, but I do need to get some stuff ready for tomorrow. And, obviously I want to spend some time on the Discord. So, yeah, hey, this was a fantastic conversation. I'll be more than happy to do this again sometime in the near future.
Yeah, let's make it like maybe like a weekly or bi-weekly thing if you want.
Yeah, I think I could probably do this again in probably 2 weeks or so. Like, I'm going to be starting this Wednesday. I'm going to be taking a trip out to California for about 4 or 5 days. So I won't be around, unfortunately, to hop on the Discord or really be very active here. Thursday, Friday.
Yeah, no, take your. What are you guys going out there for?
I'm going out there. I'm going to take a 1-day trip to Yosemite with a couple friends. Then I have a really good friend from my PhD program who is getting married out in Sacramento, and then going to spend a day out at Lake Tahoe. So,
very nice. I've got family up in that area too. So,
very nice. Yeah, I'm excited. That'll be my first time there. So, looking forward to it.
Awesome.
Yeah.
Right.
Well, so hopefully ATER pays. I'll pay for this whole trip.
Pay for all the trip, right? All right. Yeah, so people are just saying that nice. you guys are awesome. Thanks so much. I learned so much stuff. Appreciate it. Kenny from the Discord says thank you, appreciate it. Everyone's just clapping and good stuff.
Good.
So
I'm happy. Yeah, this is my first time really doing like one of these. That's not like talking about weather forecast or my cloud physics modeling projects. So.
No, this is awesome. I think it's great. I mean, at some point, I'd love to build something out like that kind of captures everything in one place, and I think that'd be such a cool like tool for people like us that kind of like understand how to yeah. So maybe someday we'll get to do that kind of stuff.
I think so. Yeah. Well, I mean, a lot of this honestly has been like an ongoing process. Like I said, I have my Black-Scholes, model that I run whenever I want to price options in real time. I'd like to be able to package that up, put it on a GitHub, and hopefully retail can use it to their own advantage. I have a presentation that I've kind of made, for some family members, to kind of teach them, the basics of Greeks, how they all play with each other. And I guess I could end on the note of saying, like, especially if you're trading options, or really the first time you enter the stock market, like I went into it thinking, okay, I have this set amount of money. I'm fortunate, at least, you have a lot of stuff I need to pay off in the near future, but, I'm in a position where like I can comfortably pay bills otherwise. I can, kind of take this, learn it. And I saw like, my initial investment as kind of a tuition payment of sorts where if I lost all of it, oh, well, I learned something. But at some point, I realized that a lot of retail, a lot of people who, just want to invest in something good, hold it for, a few years, try to make a little bit of money on that so they can do better for themselves and their families, but not get repeatedly bent over backwards, by, shady companies, by not understanding warrants, by, like why did, I bought when it was $5, now it's $1, like what happened here?
Yeah.
To be able to give people kind of that chance and the same amount of tools, where, they can kind of learn on their own, but be able to take a lot of money, be able to multiply it quicker over a longer period of time, just by simply like understanding, the basics, the mechanics, and then just taking that leap of faith, that they too can definitely do it themselves. And I really think there's a way that we can all do that. And, having this community is definitely helpful for that regard.
Yeah, I appreciate you joining the community and doing this with us, and it's awesome meeting you now finally in person, or not in person, but at least over voice. And
of course.
After you have an awesome trip, and obviously I'll see you on the Discord, but we'll have to do this when you get back.
Absolutely, yeah. I'll be looking forward to doing this again, and till then, let's stay diligent. Let's hope ATER makes us happy Monday, Tuesday, Wednesday, and
yeah, I think the big days I'm looking for are probably Tuesday and Wednesday into the at least the Thursday part. So I'm excited and to see what's going on, and I guess I'll see you guys all in the Discord. But DZ, thanks so much for coming out, man.
Yeah, thanks. Appreciate it, Anon. You have yourself a great evening, and thanks for inviting me.
Yeah, thanks. All right. Have a good one, man.
Yeah, thanks. You have a good one.
All right. So we're off of this. Is everyone good here in the let's make some money. That's what we're looking for, right? I think I need to shut off this, though. I need to turn off or mute this so I don't have a reverb or anything like that. Can you guys still hear me? You guys able to hear me still? Let me just see if we can pull up. Yeah, okay, we're still good. All right, so yeah, I mean, I think he and I came up with the same thing, which basically is I'm looking for, probably a retracement down into this area. We're looking for probably, some buy orders that will come around, the 5 to 520 range. My guess would be anytime if it dips down below this line, which is the 520, which is about the Bollinger. Yeah, I think we had some bots earlier, Vlad, and then from what I understand, I think our mods took care of them. So we screenshotted them, and then we just moved on. I think there was even a grandma bot from what I saw. Yeah, so I think that's what let's look for. Let's see if we gap down in the pre-market. Maybe they try to attack this, $5 mark, scare out some retail. For many of us, that's going to be a buy situation, and then I expect them to kind of recover into the day, and then by Tuesday and Wednesday, I kind of think we take a little bit of a leg up, and we'll see what kind of happens. But I mean, you can just see it on here. You've got the bull flag, you press down, bull flag, and then this one you kind of double top, and they're really trying. This is the 200, and that's what they're really trying to make sure we don't cross over, because as soon as that crosses over, that forms, obviously some of you know, a very, very, very bullish chart that a lot of technical traders will start, and not only that, but like there will be other people that are that look at that chart and go, this is a good chart to trade. So, yeah, I mean, it's very possible that, we see this thing where we kind of consolidate in this area and then pop up, and then we'll be back. I think he had said that we could possibly run up even to touch the 8 and then come back down, and then we'll just be kind of chopping around this area for the end of the week. So, I think at this point, if you're short, like if you have some like options expiring for next week, I'd be looking for an IV spike, and then for me, I'm gonna roll some of those and buy some more, in the monies, but I think that's one of the last things. Hold on, jump in a bit before support. Yeah, I mean, yeah, you would probably be buying in this range and just see if it holds up, and if it goes below that, I would be probably looking to buy even more, because we've gone over the numbers. The numbers are just not. They don't make sense. I think I told you guys when I put up that DD. I mean, you're looking at, what was it? Pull up the numbers for you. Did I close that document? Let me find. Is it this one? All right, hold on a second. I turn off my. All right. Hopefully you guys can still hear me, but basically, we traded 760 million shares or something like that. I mean, like for volume, since that's nuts. Like that should never happen on a stock that has 100% utilization since March 8th. Like they're in trouble in this stock, and then soon they're going to be, probably more options in the money than they can even deal with, and at that point these shorts are not going to be profitable, and they're short anymore, and at that point it's cheap, it probably makes more sense for them to just close and cut their losses. So we will see what goes on there, but it's almost midnight, and I think I gotta get some sleep and then be with you guys in the morning and see pre-market, and hopefully everyone's gotten at least a good kind of understanding of what's going on here. I think DZ was great with explaining, how options delta hedging are, and if you need to go back and rewatch it, that's great. But last week's OPEX will have, it's important, but at the same time, I would say he was basically saying that they were able to de-hedge, and basically they're going to try to push down the stock in the morning. So my guess is all those ones will come due probably on Tuesday and Wednesday of next week. So I wouldn't really pay attention to Monday's price action unless you're looking for a nice big dip to get in. But once again, none of this is financial advice. Neither one of us is qualified to give that, and all the opinions that are expressed here are just kind of like two retail traders talking about things that they see, and you should not listen to us. You should do your own due diligence and kind of make your decisions. But we're just saying, every time I hear them say they're in trouble, they are in trouble. And you have someone that's very smart that understands forecasting data with DZ, and he's also saying they're in trouble. And it's simply because as long as retail is putting, it's not even retail, it's basically there was some smart money mixed in, and at some point these guys are a wounded animal, and someone else is going to come along and be like, what, let's add let's add a little pressure, so every time it dips down, hits that 60 or the Bollinger, it's going to push back up, and then we go from there. So I think this is going to be one of those things where it's going to make life-changing money for some people, and that's just my thought. I could be wrong, but at this point, like the data and this, the math is on our side, where it says this doesn't make sense. Like what's going on with the volume, what's going on with these short volumes. It's it's rough for them because you have to understand, like, these guys can kick these cans down the road, and he even showed you they're selling naked, what's called naked calls. It's when you don't have the shares, but you're basically rolling them into the options chains, and so they're basically taking a risk, like a calculated risk, and that's because they don't have enough shares to short, so now they're having to use the option chains to kind of like, hide out the positions. And the problem is, like, we've got people like DZ who are smart enough to spot it out, and so, like, yeah, you can try to trick us, but, like, we're not selling until we see, short positions closing. And so, and you're right, sharks smell blood, and at this point there are some other hedge funds out there that are going to look at this and go, it's just too damn easy. Like, let's just go ahead and every time it dips down, we're just going to give them a little bit of volume, get a little buys in there, buy some options up, and they're going to make this run. And when it runs, it's going to run hard because, like I said, I mean, the shorts could have closed down here. I just want you guys to realize this. When we were down here in this level, especially like this one right here, shorts could have closed out their positions and been really super profitable. Like, I mean, let's look at that. Like, this is the daily. They were, we had this little uptrend, and then they just pushed it right back down. And anywhere in here, you could have just decided, okay, we're going to start covering. And then that's when everything went to crap for them, because once retail came in, this first candle for that daily, the 46 or whatever million that we had, that basically trapped them in. Like, that wasn't retail. Retail can't bring that kind of volume. Boom. Like, that just straight up trapped those shorts. And once they were trapped, they're just getting squeezed up. And, that's partly retail, but it's also, and on what happens to the volume shares going through the dark pool? When is that coming to light? Yeah, so dark pool and over the counter, all that happens for that is essentially those shares will never make the lit exchange, so they'll get packaged up and basically like washed out. So basically, when you buy something, it gets paired up with like a sell that's around the same, and so what they end up doing is it negates any like real pressure. So, like, it doesn't count one way or the other. It never counts. Now, what eventually happens is your broker has to give you like time plus 3. So basically, your T plus 3. Those shares eventually will come due. That your broker has to go out and find them. So that will also cause buying pressure. So, I mean, they eventually count because they'll be there for FTDs. So we've already hit the reg show like 2 or 3 days ago. So at this point, it's just going to be, we hit a 1K subscribers. Yeah. Congratulations. You guys are here with me. That's awesome. Thanks so much. I'm super interested in this because I've never, been obviously monetized by YouTube. And so I'm curious, like, how does that work? Like, I clicked on the button once and I was looking at it and I was like, I don't know how much you make from it. My guess would be, not very much if you only have 1,000 subscribers. Like, I might make a couple cents, but, that's a nice accomplishment. I think it's cool. You guys helped me get there, and, I don't know why. Like, I still think this is a weird. You have to meet certain hours too. You can ask for monetization request. Yeah, I think I already had the hours for whatever reason. Time for scotch. No, I've got work in the morning. I don't want to mess that up. Plus, it's like coming up on midnight. So yeah, I got 1,000 subscribers, and now when I click on the monetization button, it says I apply now. Okay. Oh, so now I have to actually do something. So apparently I have to fill out some stuff. And then I get reviewed. So I will go ahead and... yeah, I wasn't drinking Scotch Candy, don't worry. I got work to do in the morning, and so I want to make sure I'm there and fresh. But thanks. I'm gonna go ahead and cut off the stream now. I'll make sure there's no more questions. But yeah, I just have to fill out the request and that goes. But for the dark pool question, basically those shares will eventually hit down the line, just as like the broker has to go find them. And if they can't find them, then they'll become an FTD. So you are technically getting some buy pressure on the back end. It's just, it's not immediate. So, all right, Kenny, night. So thrilled to be with you. Me too. I was gonna say it's still funny to me. Like I don't know why you guys want to hear me talk. Like it's like to me it's silly. I'm like I never wanted to be part of like YouTube. I actually for months and months and months said no. I wasn't really interested. But it is fun to talk to you guys like live, or I can read your questions and answer them if But it is what it is. Flex time. Can you check my message? Sure, I'll check it after the stream. I just haven't been able to jump on it because we were using that to, use to stream the DZ stuff. Smooth and relaxing voice. All right. Well, thanks so much, guys. I'm gonna go ahead and jump off here, but you guys have a great evening. I'll see you guys pre-market, and we'll kind of go from there. But I will go ahead and link once again. I guess I'll finish all the videos with linking the Discord. It's a great group in there. We've got a lot of great people, and very excited to talk to people about that. But I'll pull up the link for that Discord. And everyone, if you're able to, you should come in there because it's free. And I think people are learning things and helping each other out, and that's a very cool thing. Okay, there's the Discord, and then I do have a Patreon that if you guys want to make me a full-time streamer someday, we will go from there, and if I get enough to replace my income, I will go ahead and do this every day with you guys all day long. And I guess I will get some tea and some honey from my throat because I'll have to talk to you guys all day long for 8 hours. So, but I will link that also. But yeah, I just appreciate. I mean, obviously, no one's required to do anything like that. But if you guys want to do this, and I can just be a resource researching stuff for you guys, wherever you guys want. So I will link that as well, and we should go from there. All right. Both of them are up. This is the end of the stream, but thanks so much for coming out, guys. And I think DZ did an awesome job. So thanks to DZ, and thanks for all of you guys for coming in and hanging out with me. All right. Have a great evening, guys.